Good morning. Good morning, everyone. Let's get the coffee going here. Thank you, Grover. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, 22 December. Futures are higher, just off the highs of the morning by 50 cents. Looking pretty good. Currently up 9 handles. Oops. Okay, first 15 minutes of the trading day, we're not doing much of anything except taking profits off the table. You can see right here on the screen that we closed mostly on the green, with a few energy names were lower, like BLO. We had utilities off a little bit, but mixed. Real estate, mostly green. Everything else was mostly green. These red stocks with red on them, most of them I would think are earnings related. Okay, SPY. Okay, so Mara is up again today. You guys have longs. I have a long too. It's just a credit spread. So as we continue to move away, that credit spread becomes more valuable to me, less valuable to the person or persons that bought the puts that I sold to them. Okay, let's see. What's the FANG stocks doing? FANG stocks for the morning, the top 10 FANG stocks that we watch. Okay, we're all green except for Microsoft, which is currently flat. Apple's up 30 cents. Broadcom is up 350. Amazon is flat. Meta is up $1.26. Nvidia is up 335, trading right near 493. Tesla is up 240. Tesla breaking above 255 right now. We're at 256.89. Now you know that Tesla, the call wall is at 255 and 260. So we'd be looking for that price action to continue higher at this rate. Snowflake, unless it drops back down below 255. So okay, Tesla. That looks good. All right, so New York FANG index. Let's go take a look at that. New York FANG. Okay. Okay, New York FANG index continues. All right, so it's pretty interesting. We had 9 days up, we paused, 9 days up again, paused. and then 9 days down in a consolidation, then 9 days up again, paused yesterday, the day before yesterday, and moved higher yesterday. So looking for a follow through there. All right, the New York FANG, the FANG stocks look good. Everything's green except for Microsoft at the moment. Microsoft is flat. Let's get ready for the opening bell. We've got 5 minutes to go. 5 minutes. All right. All righty. All right, we got 3 minutes to go. 3 minutes to go. Okay, all the FANG stocks are higher except for, well, Microsoft just went green. Okay. So Tesla currently trading $1.80 above its call wall. So we're looking for follow through there. Microsoft call walls at 375 and 380. Currently $1.60 below that first call wall. Microsoft. Apple call wall 197.50. We're a couple of bucks below that right now. So we could see Apple rise up to that level. Nvidia is up, trading at 492, up $2 and change. Meta's up $1.26. And Netflix is bouncing at 272, up 272. Okay. Let's get ready for the opening bell. All right, let me just edit this. These numbers are in the way.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees. And enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can start.
Okay, let's get ready for the. I was going to say, let's get ready for the opening bell. There we go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday, the 22nd. We are open. The FANG stocks mostly moving higher at the moment. Okay, we got credit spreads on Nvidia, Meta, Tesla, call vertical on Apple, looking for a follow through. Tesla is above its call wall at 255. If we stay above 255 and continue higher, we should see a test perhaps of 260 in the short term. Tesla. Okay. Let's Nvidia is moving higher. Here's Nvidia. Nvidia on the move. Okay, first 15 minutes, we're not doing much of anything except taking profits off the table. Wait for VWAP to be up and to the right. VWAP matures around 940, 950, somewhere around there. We start to see whether price action is above, whether VWAP is up and to the right, or if it's flat. If it's flat, we're not doing much of anything. If it's up and to the right, that's a good setup for a bullish trade, especially if the stock or company or asset has some sort of catalyst like an upgrade or company news. Down and to the right for bearish trades, like we saw with Microsoft recently. Microsoft staying below VWAP. All right, we got Tesla. Tesla's on the move. Tesla, Nvidia. It's $6.50 below that 500 level. Nvidia. Okay, so Mara, what's Mara doing? Mara was higher pre-market. Mara, a little bit of profit taking. Okay, so it got pumped up near 25.55 and faded. It's currently flat on the day. Mara. Let's check out Bitcoin stocks. It's early, so we're looking for a trend after 950. Okay. Okay, let's get Woody up and running here. Woody. Okay, we had PCE out this morning. PCE actual was 2.6 versus 2.8 forecast. 3% was the last time around. 2.6 coming in 0.4% lower than the previous number. That's the PCE, US PCE. All right, the markets are higher, taking off to the upside, and futures are breaking out. Futures currently trading 1175, 12, 48, 12, 48, 12, and pushing higher. Futures are higher. And you can hear Woody is active this morning. Bullish flow in the markets. You can hear that in the background. Okay, Netflix a little fade. Looking for Microsoft to get off its duff and go. Microsoft is flat on the day. Broadcom giving back $3 so far. Broadcom. Meta on the move, $2 higher. Meta, we have a credit spread on Meta. Meta, that's the second week of January, the 12th. I sold the 345s, bought the 340s for a nice credit. Looking for that Meta to continue higher. All right, it's currently fading a little bit, so a little profit taking. I would expect the volume to taper off to nil by noon, with people probably taking Friday off, I would imagine. When I used to work in the corporate world, way back when, I'd take the Friday off before Christmas and July 4th, etc. So I'd expect the volume to be pretty tame. There goes Mara again. Mara's starting to move. Watch Mara. What's Bitcoin doing? Bitcoin. Bitcoin is still hanging out at 43,802. In phase looking for a follow through. So if you're looking for a breakout and in phase, we're about to get it right here. Okay. Pushing a bit higher above the pivots in this area. Let's go to look at in phase, and then we'll check out what stocks are the strongest this morning. If you're day trading, you want to focus on the strongest sectors. Right now, let's see what we've got going. It's only 9:35, so 5 minutes into the trading day already. And we have survey says we're about 95% green. All sectors green except for retail. That's flat. Robotics ETF, that is flat. And consumer discretionary is a little flat right now. It's off 0.4%. Biotechs are leading, so I would be focused on biotechs if you're day trading today. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I'll be here with you all the way until 4 p.m. Okay, XBI breaking out. Okay, so you know that I took a credit spread on XBI that expires at the end of the month of December. That credit spread was for my son to teach him how to do credit spreads. Where was it? Okay, that credit spread, he made $65 per contract. Expires 12/29. We sold at 72, bought the 68. That's turning out to be a nice trade. It took off, broke out on at the end of November and followed through. Biotechs continue to rally higher. Okay, so we did take that trade off, and XBI continues to move higher. So some of you have LABU. LABU had a reverse split. It's moving higher. If you're listening, Tony, you need to roll your calls up. He sold some covered calls on LABU. Go out to the next month available. I believe you have March right now. You still have time. Okay, Tesla looking good. Tesla. All right, let's get back to some of these FANG stocks. Tesla flagging at the moment. Okay. You hear high techs in the background. Okay, futures are at the high. 4,800 was a level. Let's go look at Spot Gamma's level. These levels are brought to you by spotgamma.com. Okay. All right, so we can see that 4,800 is still the most formidable level with the tallest peak and the tallest trough. The peak is calls, the trough is puts. Actually, there's more puts right here at 4,700. So we want to stay, we're right at 4,800 S&P. I'm sorry, 4765. 4775 is another resistance level. Okay, I need to put that on the chart. Just bear with me a sec. First 15 minutes, we're just taking profits off the table. Usually watch for the markets to continue a trend. If that's what they have in mind, we'll see that trend continue. Okay, resistance 4775. All right. Okay, so we can see these levels that we need to consider. Here is at 47.75 level. Futures Moderna. That was a trade from yesterday. Moderna. Okay, let's look at Moderna, mRNA. The biotechs are moving. Okay, here's Moderna. Continuation. Actually, this isn't updated. What's going on here? Stock charts are not updated. Do you notice that? Okay. Oh, well, oh, there we go. Okay, so we're above the 100 period moving average. We need to get above 95. Once we're above this pivot, there's whoever was selling or whoever was buying in here and it got stuck. These bag holders will be satisfied that they're even as we push through it. And the next level is about 10 points higher, 11, 12 points higher at 105.94. That pivot right there where people thought this was going to break out above the 50-day. They got rejected. They wound up sitting in this for the last 8 weeks, looking for a turn, looking for it to get back to that level so they can break even. Some traders will take their trade off there at even, not considering the fact that this trend is reversing now. 9 and 21 day are above the 50-day, looking for a follow through. Okay, S&P, let's keep an eye on the S&P. S&P at the highs. Okay, I would be taking some profits off into strength sometime today, most likely. Reducing my risk, raising my stops.
Caleb down 4.5%. Wow, six stuff here. That is so brutal because so many really thought that the kind of work was behind them. I mean, I kind of offered up that sentiment too a few times over the last couple months that as long as the economy can stabilize and they don't get like a big shocker regulatory event, but this is kind of a shocker regulatory, but apparently they're not done. It really makes you wonder, like, how deep they go.
Okay, good morning.
Net income, 18%. Is it even investable, George?
Okay, so we're a nice little follow through so far. Tesla pulling away. 260 is the next level on Tesla. 260. 260 is the call wall that we need to deal with. 260 on Tesla is the next call wall. So if we manage to get to that point, watch for sellers. People that have calls will most likely be taking profits as we start to come up to that level. If we get above 260, then we'll look for the 260 call wall to roll out and up. All right, Tesla on the move. Okay, Mara back up to 26. Mara. Okay, lots of mining going on over at Mara. Marathon Digital. Mondo posting in the trading room over the last several weeks. Okay, so it looks good, Mara. Let's see what Bitcoin is doing. Bitcoin. Okay, biotechs are the strongest sector today, folks. So focus on biotechs if you're day trading. Bitcoin is still hanging out below 34,000. What was it? 700 or something like that was the high. Okay. All right, let's keep an eye on Tesla. The markets are going straight up. Maybe you want to take some profits off the table and call it a day. If you want to hang out with us and just shoot the breeze, talk about trade setups, what you're looking at Just post in the YouTube channel or in the main trading room. All right. Chewy looking good. Just saw. Okay, Chewy. Let's see. Sunrise Trader is still in Chewy. Okay. Biotechs. XBI. Biotech's at the high of the day. All right, let's keep an eye on Tesla. I have a credit spread on Tesla. That's doing well. Up and away. Fang stocks, Broadcom is off $1.80, so there is a bid there after the little dip this morning. Microsoft is up 18 cents. That was lower earlier. Meta pulling away. Meta looks good. Meta looks good. Okay, nice little pop there on Meta. Let's take a look at the daily chart on Meta. You can see what we're thinking. Meta, have a credit spread on this one too. Continues higher. Meta sold at 345 and bought the 340. All right, so that's making money. Meta's making money currently. That trade is up 12% and gaining 15% now. It's up 15%. That credit spread, Tesla credit spread is up 25%, and Nvidia is up 24%. All right, so here is Antoine. Just grab a couple of those, whatever. Okay, so Meta looking good, following through. Tesla, the next call wall is overhead. At 260, we get above 260, this trend most likely continues to this next pivot near 267. 260 is also the pivot that we ran into on Wednesday. We got to get through that level. Carvana, you're trading Carvana. All right, so in the trading room, I see some trade. All right, that looks pretty good. Carvana. Intel, Stephen, congratulations, locking in some profits on Intel. Intel pushing higher. Okay, S&P continues to move higher. Futures are trading at 19, 48.19, up 22 and a quarter. Okay, the New York FANG index is on a buy signal. Broadcom went on a buy signal about 15 minutes ago. Looking for a follow through after the dip this morning. Broadcom. Meta's on a buy signal for the last 6 minutes. Meta. Snowflake on a buy. Netflix. Yeah, it looks okay. Google looks good. It's on a buy signal. It needs to break above 142. Google. 15, 30, and 60 are all green. All green signals. Amazon, just kind of taking a break here. Tesla, all green signals, 15, 30, 60. It's on a buy signal for the last 12 minutes. Tesla. 260 is the next level for Tesla. Apple on a buy signal looks pretty strong. Let's take a look at Apple. Apple, I have a vertical on Apple looking for this to push higher. Okay. All right, a little fade there on Apple. Looking for a bounce in Apple. That's weird. All right, that's right. Okay, so it was weird. I was looking at Apple. It didn't match up with Thinkorswim. Now it's matching up. There he goes, Apple. Okay, Apple's starting to move. Okay, watch Apple. Apple looks pretty strong here. Apple looks pretty strong coming off of this little rounding bottom. Apple. Okay, the biotechs are the strongest sector, still up. XBI is up nearly 3%. Semiconductors, SOXL is up 0.7%. IBB, biotech up 2.86%. Moderna moving higher. Some of those stocks we pointed out yesterday following through for the past 3 days. Trending. Moderna is trending on the daily. If you're interested in a swing, that looks pretty good. Meta flagging about to break higher now. All the FANG stocks are bid. FANG stocks are bid. Google, Apple.
High tick alert plus 800.
Whoa, Toby Keith followed me. That's pretty cool. Is that the real Toby Keith? That's cool. Done. Red Solo Cup. Okay. All right. All right. Looking good. Looking good. All right. That made my day. Made my day. Yeah, he's a good guy. He's a good guy. Good man. In phase. Yeah, looks good. Solars look good. All right. Meta, a little fade. All right. So we got a nice little run up first thing this morning. I wouldn't get too excited. I want to see if the trend continues after 10 o'clock, 10:30. My suspicion is that, you want to take some profits off into this strength because the volume will taper off. Just think about it. People are going to go on vacation. Many people, when I was in the corporate world, I would take off a Friday before a major holiday like this. Sometimes it would take off, Friday and the Monday after as well. So it would have an extended vacation with the 2 weekends on either side, especially when we would go down to Myrtle Beach to visit in laws. Now that we live down here, I don't go over there at all. No, just kidding. All right, watching the FANG stock starting to see a little profit taking. Starting to see a little profit taking. All right. So waiting for the markets to give us a trend, get an idea of what we're going to do. We're going to fade this. I mean, that was a nice pop. We're up 0.5% on the SPY. I would take some off into this strength, lock it in, lock it in. Okay, Moderna. Moderna's looking good. Moderna, the vertical I have on Moderna is making money. Moderna on the move. Moderna's making money. Okay, these are current spreads and verticals that I have on at the moment. These are all doing well. Okay, that's up 34%. There goes Moderna. Watch Moderna. All right, it's going. Looking good. Moderna's looking good. It's up, looking good. All right, so far so good. Looking good, folks. Low battery on Tesla. Okay. All right. Tesla, the 255 call wall. Don't forget, Tesla has the 255 call wall as support now that we're above it. And 260 is the next level overhead. It's a Friday before Christmas, so I'm not expecting a whole lot of volume. We are above that level. Maybe take a little profits off. Not a bad idea. All right. So it is the Friday before a major holiday. We are at the highs. I would take a little profits off into this. If we get a higher low and we start to proceed towards 4,800, 4775 is a major level. Okay, 4775. We're right below that resistance level now. And then above that, we've got 4,800. A ways off now. Okay, I don't know where that level went. I must have moved it. All right, let me put 4,800 on here. 4,800 resistance. No, I don't want to do that. I want to put a level here. Get rid of that. Yeah, I don't think we're going to see that level today.
Broadcasting 24/7 from our studios in Chicago. And from the heart of Wall Street, New York Stock Exchange. Up to the minute market insights, example trades, and stock specific analysis featuring the smartest minds in the business. No politics, no noise. Analysis ahead of the biggest events for the economy. From bell to bell and beyond. Watch live and on demand. 24/7, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Available anytime, anywhere, on any device for free. Schwab Network, empowering every investor and trader every market day.
Okay, Netflix faded. Mara is making higher highs, higher lows, stepping higher. Mara. Okay, so we can see resistance. If we keep climbing here, 4775, 4,800 coming into view. Snowflake is higher. Microsoft pushing up 60 cents, 64 cents. Google is faded. It's still up 60 cents. Meta. All right. Tesla trying to push. Tesla's above the 255 call wall. So we're between 255 and 260 at this point. 255 and 260. Okay. All right, things are getting a little quiet right now. You don't hear much flow. Nvidia trying to bounce. Microsoft. Microsoft looks really good. Check out Microsoft. Microsoft looks good here. Microsoft new home sales out 590,000. Going. Microsoft going. Microsoft's going. Okay, there goes Microsoft. All right, on the move. Microsoft going. Okay, let's see. We're gonna follow through. Microsoft looking for a dip first. Microsoft. All right. Meta fading from the high, 357. Anticipating that we could see this fade from the highs here. All right. So futures are currently 1625, 1650, 1625, 1575. So we're fading a little bit on the futures. We're producing lower highs right now on the 1 minute chart. Futures. Okay, let's take a look at the NASDAQ 100, see who's number one. Moderna, ANSS at the highs. Moderna having a good day. Moderna. Okay, at the high, starting to flag now. Biomarin, we mentioned Biomarin yesterday, showed signs of a follow through. Biomarin looks good. All right, let's take a look at some of these biotechs. Okay, this is the top 25 stocks in the biotech, NASDAQ Biotech ETF, IBB. All right. So we're looking for some of these to follow through. Let's look at Biomarin. Biomarin. Okay, nice follow through on an inside day yesterday, follow through today, off the 21 day. RSI is rising. Volume is a little suspect. That's the only thing there. Stochastics did dip back to 50, starting to turn. Maybe there's something here. Biomarin. I like Moderna better. Moderna was looking pretty strong yesterday. For the last few days, consolidating right above the 90 MA and turning. Need to take out 95 now. Volume yesterday was above Wednesday's volume, so we'd like to see that pick up like it was last week. Moderna, RSI still pointing higher. Okay, Moderna. Watch ARM Holdings. ARM Holdings starting to move. I see that out of the corner of my eye. ARM Holdings moving. Let's see what's the deal here. Okay, we got resistance right there. Moderna. Okay, this looks like it's on the move towards the 200-day. RSI is rising. Stochastics full turn. MACD is bullish, bullish, bullish. Okay, ARM Holdings, watching that one. We'll come to that. Come back to ARM in a minute. Let's take a look at some of these other biotech stocks. Illumina. Okay, that looks good. Sort these by performance. Okay, so NBIX, Neurocrene Biosciences. Kathy Woods bought a bunch of stocks yesterday. Tesla was one of them. That was mentioned by Buford after hours last night. Did you take those down? Somebody posted. Oh, there we go. Okay, I see it. Okay, Kathy Woods bought. Let's see, for ARK K, she bought 93,965 shares. She bought Zoom as well. Kathy bought Zoom for the ARK K. Zoom. Okay, that's starting to move. Volume looks good. Stochastic still grinding. Cup and handle pattern on Zoom. That looks like it could break out. We did trade this back here at 64.65. I got shaken out. I didn't like the way price action was working. Now it's starting to go. Square she bought for ARK W. That's trending. Tesla again, she bought 17,422 shares for ARK W. And Zoom. She sold Coinbase and Bitcoin Investment Trust. Okay, so The biotechs look good. Biotechs look good. Okay, Major Tom, the ground control. We've got a nice lift off here on XBI. Moderna looking good. Flagging at the highs at the moment. All right. Tick cumulative trying to turn up on the 60-minute. It is green. It is green, but flat. Let's see what the 4-hour looks like. 4-hour chart is green. 4-hour chart's green. That's a longer term signal. And flat, let's see what 30-minute looks like. 30-minute is green and turning up. Tick cumulative is turning up. So maybe we get a little follow through. VIX is starting to taper off. VIX is starting to move back. VIX is starting to move back from the high. Let's see what the US 10-year looks like. US 10-year. Okay, that's at 3.86%. 40 bip move there. Okay, here are the sectors. You can see who is doing the best. Biotechs. I'd be focused on biotechs with the strength that we're seeing here. XBI is up 3% on the day. IBB is up 1.83. The two of these have different weightings. The S&P 500 XBI, I believe, is like 1% per constituent, whereas IBB has something like, I believe, Moderna is like 8% or was 8%. IBB. All right, so I would focus on biotechs today. Moderna's clearing moving averages. It's clearing the 95 level. So there goes ARM Holdings. ARM is going. ARM is going to new highs. ARM new highs. Let's see. Watching ARM making new highs. All right, folks. All righty. So it looks pretty good. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 10:15, 10:14 on the East Coast, the best coast, the coast with the most, the Costa Nostra. All right, looking for a follow through. Okay, let's look at Apple. Apple consolidating. Microsoft was looking strong there. Do we follow through? Microsoft's still going. Keep an eye on Microsoft on the move. Microsoft is going. If you're taking off early for the holidays, we're at the highs of the day. Maybe you want to consider taking some profits off into strength. Okay, Joe K over at Option Hawk saying that Christmas is canceled if we don't hit 4,800 today. I don't know. We've had quite a move. Let's take a look at the New York FANG Index very quickly here. Okay, of note, look at all the nines. 9 days up, pause, 9 days up, pause, and consolidate. Consolidate 9 days, take off to the upside for another 9 days, pause yesterday, the day before yesterday, Yesterday we pushed higher. Let's see if we can get another 9 and just continue higher. RSI showing a little divergence. Okay, so you got a lower high here on RSI. Be aware of it. Okay, here's RSI. Lower high. This is New York FANG Index. Okay, we got wicks on the top of these candles. So there's people taking profits first thing. That's what I'd be doing. That's what I am going to do. If we start to fade here, I'll take a few more things off and just coast for the rest of the day. I'd like to see this trend continue. Okay, looks good. Tesla, flat VWAP at the highs right now, Tesla. Boeing, talking about Boeing right now on Ameritrade Network. That's MA, Boeing. All right, just sideways on Boeing. Boeing's had a nice run, so consolidation here makes a lot of sense. Interesting. Let me see if I continue this out, where that goes. Isn't that interesting? This was down here. Just open the chart. The top of this wedge or broadening pattern. Okay, I haven't opened this chart in a while. Let me delete some of this. Okay, it looks like nice accumulation over here. You see that? On Boeing. Most of you have been in this, so that looks good. I currently don't have a position in Boeing. It looks really good. Starting to consolidate at the highs, so I'd be taking a little bit off maybe. RSI is starting to drop. Price action moving sideways. Boeing looks good. Okay, so back to S&P. Let's keep an eye on the S&P. Looking at 4,800 potentially on the S&P. Cash 47.75 is just overhead. 45.50 support. Okay, I'm going to take a couple minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Friday the 22nd. 3 days to go. 3 days to go for Santa. It's 10:19 on the East Coast, the best coast. I'll be right back. Tesla fading. Okay, don't forget about the shippers with the whole business that's going on in the Middle East. Zim Integrated is on the move. This one was a high flyer back in 2000, what, 21. We hit 36. That looks pretty good. Zim. Zim Integrated is looking good. Shippers.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close.
Zim Integrated looking good.
No place better than the Schwab Network.
All the need to know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Recap your trading day with the wrap right here on schwabnetwork.com.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network. 2023 certainly was the year of artificial intelligence, the big breakthrough from language models, sending NVIDIA shares soaring, a lot of chip makers also in the midst, and some knock-on effects to software. Eventually, the question for next year is, where are we in the process of building out these services? Joining us to talk AI and the outlook for next year is Joshua Anthony, CEO at Boosted AI. Josh, tell us about what you guys are doing at Boosted, and welcome to the Schwab Network.
Thanks for having me on. Boosted AI is a generative AI platform for professional investment managers. We're used by 180 of the biggest asset managers in the world, with assets totaling in the trillions, to basically accelerate the research process, consume huge amounts of information.
All right, Zim looks pretty good.
And track and understand risk in the market in sort of non-traditional.
I'm going to take a vertical on Zim out in February. I'm going to take a vertical. I'm going to buy the 10 and sell the 1250 for now. And then I'll roll the 1250 up if price action continues. All right, so this is what I'm looking at right now, the 10, 1250 out in February. Zim Integrated, doing the 10, 1250. Looking at this trend break. Rate of change is starting to turn the corner. And you can see ATR starting to pick up on this weekly time frame. The daily looks pretty good too. Breaking a downtrend.
So right now, what are you seeing as the most needed information? What's like the hot search on the platform?
Yeah, I think the number one thing is kind of trying to understand what are the risks that nobody's really looking at. So in the absolute short term, supply chain disruptions are something that aren't really being talked about a ton, but are really having a really big impact on the market. We continue to have things like COVID era problems. This has been compounded by the chip ban, and then recently we have the sort of attacks happening in the Red Sea, which caused major disruption. Something like 10% of the world's trade goes to the Red Sea, and that's going to have huge knock-on effects. Everything from grain, oil to consumer goods, and companies as disparate as Lululemon to like IKEA are going to be impacted by this. So kind of these like non-standard risks is probably the biggest thing that we're looking at.
Interesting. And I feel like our conversation's kind of limited to the commodity realm on that subject so far, but it sounds like
Okay, let's look at the shippers, maritime shippers. Let's see.
And again, it's not just the Red Sea.
Shippers, bulk carriers. Let's see what these look like. They're all breaking out.
now,
And
what about the AI specific? Can you use your AI to research AI? Does it work like that? What do you see like as we're going from like the picks and shovels phase to whatever comes next, or do we just stay in the picks and shovels phase all next year?
bulk, Baltic Dry Index, trying to break trend. Costamar, CMRE. Turn the corner. DHT. Diana Shipping, turning the corner from a double bottom.
Training large language models requires a huge amount of computation behind the scenes. And anyone, like
Eagle.
AMD and NVIDIA are probably going to continue to be winners from that. But also, smaller companies that provide infrastructure, either to make these large language models better or to actually train and build the large language models. So the second category would be back-end infrastructure. Those would be companies like Oracle or Snowflake. And then the third category is we start to really see some of those beginning early adopters start to see
GLNG looks good.
and their capabilities versus people that are not quite. So this could be anything as disparate as like Adobe with the Adobe Firefly product that they released, or things like GitLab, which is using generative AI to enhance developer productivity.
Golden Ocean, 52-week highs.
I like that phrase you used in there. Did I hear we in the machine?
Grinrod Shipping.
Yeah, we
Global Lease. GSL.
as a human working with the machine. Our byline is AI is not replacing you, but someone working with AI.
Okay. So we're kind of in a bit of a transition phase then, where we should start to expect product delivery.
Kirby KEX volume.
Incorporating new AI. It seems like it's been a very hardware-focused story for the stock market. I think a simple way to kind of propose maybe what comes next is does it become like a software story?
Nordic Tanker, NAT.
I mean, we think so. Certainly in our direct experience, the number of clients we had basically 4x within the year. And at the beginning of the year, a lot of our clients were really kind of
Navios
trying to understand it. As we shifted into the end of the year,
and Salt Bulkers,
across the entire space.
Safe Bulkers, FSB,
Seeing productivity gains as much as 30, 40 hours in a month on current
and Starbulk,
my expectation would be that's
SBLK.
a broader trend happening across every other industry.
Adobe, GitLab too, that you singled out there as leading the front in terms of giving the tools for people to develop their own use cases with AI.
Adobe in particular with the Firefly product, basically one of the first professional grade image generation systems that you can use to generate images, 100% own the copyright. And
Okay, so that looks good.
seeing some of the productivity people can do. It's just really, really incredible. And then
S&P continues.
that kind of do the sort of thing. There's Microsoft Copilot and a few other variations.
Trying to get above 47.75.
Developers that are using systems like that are seeing productivity gains in the 50% plus range. And again, same kind of thing in our company. The types of developers that are using that tend to see massive productivity gains over other things. But I think there'll be broader trends too. Companies like Mercedes-Benz have started trying to pilot this in hundreds of thousands of vehicles. You're starting to see other more like data-oriented companies using this as a like FactSet using this as a wrapper to try to get access to more data faster and quicker. So I highlighted a few key examples there, but I think it's going to be a broad trend.
All right. Love the specific.
All right, so it looks like the New York FANG stocks, for the most part, going to sleep except for Microsoft.
Coming up, Chart Masters got some notes and a couple interesting charts for us, especially after yesterday's carnival move. There's some love in that industry. We'll talk analog
Microsoft at the high of the day. Biotech's in play. Moderna continues to ramp higher. Moderna having a good day. Moderna.
Have a choice in how you invest with Schwab.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
Watch Moderna. Moderna's about to break out of a flag.
Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free.
Moderna looking good.
Schwab Network.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades and full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Alrighty, S&P's trying to push through overhead resistance, 47.75. If we can manage to get above 47.75 and volume picks up at the same time, that would be awesome. What's DoorDash doing? DoorDash. Okay, trying to push a bit higher. DoorDash. We look at the daily chart. Okay, just a note, ARM Holdings continues to ramp higher. We've got the 9 and 21 50-day all turned up and to the right. Momentum is with the bulls. Looks like with stochastics embedded like this, it looks like institutions just keep buying. Buy high, sell higher. DoorDash. Okay, bouncing off of the 21-day for the last 3 days. Note the wicks underneath the candles. Okay. Looking for a move back up to the highs. My son has a credit spread on this one. We're just looking for a move higher. Let me see what he's got here. I forgot off the top of my head. He has the 95.90 credit spread for March. Okay. Looking for a follow through. Okay, Walmart.
one crucial piece of this information about this chart is that you can see that we had a long-term uptrend, our white dash line there going across those lows. That was interestingly right where we stopped on our downward move on here's the earnings event from back in November, or excuse me, late October. And since then, we continued making our way up. We took out those old September highs. Then we saw some consolidation for a little bit, some sideways kind of range bound price action between maybe 144 to about 150 or so. Then we had another push upward. We had a break, and now I'm kind of curious. It almost looks like it's a little hard to see there, but kind of a bullish pennant type pattern here where we had strong range.
So Sunrise Trader was just telling me he bought some Walmart, looking pretty good. Walmart turning the corner, 50 days overhead. We're above price actions above the 200-day, 921 day above the 200-day, price above the 200-day, volume starting to pick up. MACD and stochastics looks good. Okay, a little bit more resistance up here at the highs. Okay, a little more resistance at the highs. 47.75 is resistance. Okay, 47.75. So we're consolidating, flattening, VWAP's flattening out right now. Alcoa aluminum. A lot of people talking about Alcoa, the trend break on Alcoa. Watch the S&P here getting rejected. A little profit taking. All right. So it looks like we're going to consolidate here. We're going to flat VWAP, so we could pull back a bit. If we don't hold VWAP, look for a test of the gap, maybe. 47.50 is support. The volume is pretty tame. Very few blocks. We only have 4 blocks on the SPY, 2 on the Qs, and 2 on IWM. That's very anemic, but not unsurprising given it's a holiday weekend, major holiday for Christians. So volume should taper off. People will be taking off early. If you haven't already left and just listening to the broadcast, happy Merry Christmas. Okay, Alcoa aluminum taking off to the upside. Alcoa and Freeport. Freeport is just grinding here. Alcoa aluminum looks good. Someone was talking about Alcoa last week as far as when the dollar continues to move lower, how commodities should respond by moving higher. Let's see what gold looks like. Gold, GLD, gapping up. Silver. Okay, those look good. What about copper? Copper looking good, trending. Now, this is a leading economic indicator. Okay. Construction related names. Also, Centos, which was moving yesterday. Centos breaking out. Centos breaking out. Let's see what NXT is doing. NXT. Moderna. Centos. Meta. Meta. Meta trading and looking good. Okay, it looks good. S&P consolidating at the highs. All right, Meta. On the weekly, looks good. All right, a little bit more fade. Looks like we're going to fade here, folks. Take some profits off.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market. Weekdays at noon on the Schwab Network. Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network anytime, anywhere, on any device for free. Schwab Network.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner. Warren Buffett back in the energy trade. Maybe Young, what do we got here?
Treating Oxy really like a buffet over the past few months. And now his stake is at around 28% of the company right now. Now, Oxy is on track for its highest close in more than 5 weeks, but the stock itself hasn't done as well as you think it has.
All right, so consolidating at the highs still.
Berkshire Hathaway, of course, they bought about 5.2 million more shares of Occidental Petroleum in between December 19th and December 21st for about $371.1 million. And Berkshire Hathaway's regulatory filing shows that this now brings its total ownership of the stock to 243.7 million shares. Now, the optics of this may be a little bit strange. Oil prices are down more than 50% over the past 3 months. And Occidental Petroleum, as I said, is not having a great year. Now, although its North American production remains elevated, we learned in the earnings report last month that growth has been decelerating for the company. And Oxy shares have been
All right, S&P still hanging out at the highs.
that wouldn't necessarily deter Warren Buffett. You know, he likes to buy into it. And this tracks along with Buffett's goal to bet on the U.S. Now, last week, there was another purchase made. Buffett bought nearly 10.5 million shares of Occidental Petroleum for about $588.7 million. And all of this means that Buffett now has a total bought, I should say, about 19.6 million Occidental shares just over the past 3 months, valued at about $1.21 billion in total.
Okay. So we're now past the $1 billion mark and doing it at various levels, but it seems like taking advantage of the dip, especially in the last month.
Yeah.
With the pretty big drop. Obviously, stock market lights up to 2%. Oil is also having an okay week, so maybe so. Okay, 1.2 million more shares added to the portfolio with Berkshire.
All right, just resting my voice. The market's just consolidating up here right below 47.75. Resistance, supports right below 47.50.
soundness of that overall business. So I'm not surprised. I wouldn't be surprised to see they just bought the entire company. I'm not saying they're going to. I don't know what the position is in total of the equity, but overall, their position both domestically and internationally is well pronounced, and they're making quite a bit of money. Their cash flows are quite robust, and effectively, that's what Mr. Buffett and company likes to have.
Right. I guess if energy is good for Buffett, crude oil bulls can maybe sleep a little better at night, Scott.
Yeah, I think you're right. That there seems to be a real influence when we see Berkshire enter into something like that. We'll see how it happens, and obviously there's no guarantee. There's not a recommendation, but that is definitely a phenomenon that we tend to see when these types of things happen. So energy's kind of poised too to be in a move to the upward position. We need to mention that in the last segment that Buffett's not against or opposed to buying the dips, and that's what we're seeing here. So we're going to sit back and see how it goes. Traders and investors may be poised to jump on the bandwagon should they see this move starting to move.
Right. With WTI holding the mid 70s, kind of lane that it's been in, there's not a whole lot to say about the commodity price. I mean, it has had a good couple of weeks since the Fed signaled they're ready to open up next year's cuts. I mean, it seems like with all the dollar downside we've gotten for, we should be able to put a bid into commodities. But then again, China's not blowing up their economy, so who knows?
Well, I think that's a good point to bring up. I still think there's weakness in that area of the world from a demand perspective, and you also have to look at the supply side. The United States is actually the largest producer of oil now, and so therefore one can make the case that there's robust supplies. But at the end of the day, as long as the commercials are looking to maintain supplies that are restrictive, it's going to be supportable prices, and based on the inelasticity of demand of oil, that's what they want. They want higher prices and a little bit lower volumes. That's how they make their money. So
Our Microsoft
overall balance
at the highs here. Microsoft
I see any
starting to flatten out at the high.
right now, but
Microsoft, a little bit of consolidation. Wicks at the highs. Volume looks pretty good. Still pulling away from VWAP. Um, Microsoft has been lagging the other FANG stocks.
Let's talk some of the intraday action here real quick. We are in a little bit of fun and
All right, looks pretty good though. Microsoft. Microsoft.
We've got a little bit of a tick down on the inflation print. It was very, in line with the recent themes and trends.
Still going. Microsoft.
But they actually fell short of the new intraday high. And now we're below the
Okay, RSI is above 50. RSI is above 50. Microsoft looking pretty good. Let me see. Let me just pull this over here.
And you're right. When the PC core came out today at 1.9%, that's obviously below the 12-month target that the Fed has, suggesting at 2%. So all of this will kind of add impetus to the things that you're talking about there. But yeah, I think that there may be some profit taking. That's what wise, intelligent investors and traders tend to do when they have opportunities, and apparently they're seeing this as an opportunity. We should pay attention to
Nice
that.
volume.
We should adjust, maybe our outlook and things
Okay.
like that based on what we're seeing with them. So yeah, it's definitely significant. We'll see how significant. It's probably one of those things that could become more significant if we see a greater move in that direction. But we'll just kind of have to sit back and see how that
Yeah,
plays out.
Microsoft looks good.
George, I kind of like that idea. Where does the bond move get interesting? What's significant? What's just, murmurs under the loud roar of
Looking like Microsoft's going to pull away.
discussion?
If we can get through 377.64. All right, we're starting to fade a little bit more. Indices are starting to fade. All right, looks like we're going to fade here, folks.
Because that might be a sign that the economy is starting to roll over in terms of growth. So I think the 4% level is actually a balanced level right now.
Looks like people are fading this, taking some profits off.
what the market is signaling with yields, at least on long-term rates, inching closer to 3.5 levels. So I think that's an area to keep in mind. But I wouldn't be surprised if we see the fourth quarter again, just because of the magnitude of the decline we've seen since late October.
All right, SPY is on a sell signal at the moment. Okay, SPY. It's on a sell signal. Let's see if this just chops around here or if we take off to the upside.
Schwab Bank monthly service fees or account minimums, unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Moderna looks like an early ABCD pattern. It's squeezing at the moment. Moderna, mRNA.
Trading the trending names every day.
Moderna.
I'm Tom White, host of Fast Market. Ready for you, ready to go.
If we start to fade more, you might want to
Schwab Network.
consider some puts. For now, though, it's possible that we could just chop around on a flat VWAP. You know that when we get a flat VWAP like this, price action could stay inside of today's range as well. Okay, so right now we're fading a bit.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
You can see the standard deviation VWAP bands. We're at the lower band right now. We could bounce right back up towards VWAP, chop people up. If we start to lose this and go into the gap, then the next level would be 472.75.
No politics, no noise. Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Low tick alert minus 800.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So, all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
All right, we'll continue to fade.
I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
No problem is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
It's time to move forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network.
All right, just watching the S&P right now.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
All right, we've been on a sell signal since we lost VWAP at 10:46. Volume picking up. All right, Meta fading from the high. It's off 50 cents right now. Microsoft holding up. Microsoft is up $1. So it looks like the FANG stocks, many of them were higher pre-market and into the opening bell. Looks like profit taking. People taking off for the weekend early. Not a bad idea. Biotechs, strongest sector today. Moderna hanging out at the highs. Moderna having a good week. Okay, so biotechs biotechs look good. XBI, IBB, LABU. Tesla flat. It's up 50 cents now. 255 is a call wall, so this should be support for now.
observation place because that was not completely locked out in stone. But he did talk about Q2, Q3, where we may be cutting edge. So the job that he's doing works. The market is responding favorably. I think it's really important. I mean, don't think about it the last couple of weeks. Think about the year we've had, right? What a perfect opportunity. Thanks for having me on to look over the year we've had. We've had a major banking crisis. We've had two wars. We've had months and months, year and a half to change of interest rate raises. We've had every possible challenge into the marketplace, plus all the doomsayers talking about recession. Yet the market here, at least before the end of 2023, will trade less than a percent. We are at record highs in the Dow with Russell just tested in 46 days, went from a 52-week low to a 52-week high. That's never happened before. That means that the breadth of the rally, of the numbers we've seen, the fact that it's settled, that the market outlook, a lot of people say, oh, what's the big deal? It's a rally, seven stocks are going up. But once you see the Russell start accelerating in that level, that means that there is a fairly wide rally. Small cap, mid cap, that rally significantly. So this is where the market started, but we're massive already.
Look, I mean, it's stack numbers, but are you surprised to see many of the strategists with S&P targets next year for 5,000 plus on the S&P?
I'm not surprised.
Does that seem doable to you?
I think you know what, look, think about all there are people still on the sideline. There are people in cash. There are people who are short. There's this whole plethora. You use an SAT word of people out there with such what's the word? You know, they're so convinced about the negative impact of the market over inflation and all that they're not buying into this yet. And so as we get to the point where we start lowering rates and we get through the new year and all that, that's going to be like a slingshot. That's my job. I mean, there's a lot of money still to be put to work.
What about Santa Claus rally? I mean, that's tough, super near term. What do you think? Are we in it?
I think we're
Did it
completely in it.
start? I mean, we're 8 weeks of gains.
So, I mean, look,
What about
never
this
really
next year
analyzed.
and into the new
I've
year?
never really analyzed it, whether Santa's really done at the end of November, it's in mid-December, guys.
Right.
How long he started staying with us this year? It's been clear. Everyone said November would be bad. Look at that. November we've had in May. December, okay, well now it's finally getting bad. We have only, I think it's notable that this past Wednesday we had a weird anomaly. We had this day that was like not the rule, it was the exception to the rule. If you remember
The
at 2
worst
a.m.
day. Yeah.
Right. So suddenly at 2:00, the market rolled over aggressively. We sold up 80 handles, and that was significant. So that was an upside to headline. That was either a margin call, that was either a massive option play, that was either some fund that was liquidating, whether it was redemption. You don't know what it was. But if the market people, again, like the people they started who, if they're watching this market, they felt that we were in trouble. We would have sold this a long time ago. Every opportunity, any pullback from this market we've seen is a up to the right.
Yeah, there's been a lot of sort of questions as to why a day like that happened. And one of the things I had heard was that with the selling, right? Selling, more selling, and then the algos kick in
All right, these biotech stocks continue to show favor, so I'd be focused on them if you're day trading.
where are they? And that's the question. Where are they? Maybe, I mean, it's wait for Christmas, they're done, they're sold, I mean, they're finished. Why didn't they step in? We just talked about 80 candles. You liked it before. You really like it when it was down big time, right?
It was an anomaly. Okay, they could be in the same boat. The car may take shifts. You know that at the end of October, nuclear plants shut down. At the end of November, hedge funds shut down.
Right.
And so we're left sort of in the corner at the end of December. So the market may have these odd anomalies, and it's surely not the rule. It's the exception. Where were they? I don't know. If I was a buyer, I was sitting on some cash, and that happened.
All right, Marathon Digital is squeezing, about to go again. Marathon Digital squeezing.
Right? Because this whole amazing building that we're in and this market, which is just so robust, and the consumer in good shape and all that, can literally be turned around on a dime. You know that, right? One bad piece of news, one more war, one more crisis. If it gets some traction, this
All right, starting a little bounce now. Marathon is going, starting to go now. Marathon Digital. Okay, this is one that Mondo brought to your attention, what, 3, 4 weeks ago. Squeezing, looking for a follow through. Marathon Digital, looking good. All right, so here's the squeeze I'm looking at right now. The squeeze, RSI pointing higher. RSI is pointing for a breakout to the upside. Marathon Digital. Watch those Bollinger Bands. The lower bands starting to open up. Marathon Digital. Marathon trying to go now. Again. Jeez, this thing is like crazy. Crazy strong. Marathon Digital. Let's go, Marathon. Squeeze about to go.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window. Other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me always put people before. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading. I'm Tom White. I'm Kevin Diggs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Okay, Marathon coming out of the squeeze, trying to push a bit higher. A little profit taking, it looks like, on a little pop there. I would expect it to be a bit slower today, except for the degenerates that are still hanging around, trading on the Friday before a big holiday. Not anyone in the trading room, of course.
November when the market started to take off. So I had to play a little catch up here. I'm one of those catch up guys that we're talking about for the past few weeks. So it's worked out for the better, overall. I do think we are going to see something of a slowdown in economic activity. I would think first half of the year. I don't know how much that impacts equities, as if the Fed is aggressive in changing their stance on policy, that can work out better for us, as hard as it is to say that, because I know people lose their jobs.
Yeah, you caught that? You caught that, Frano? I did, Frano.
Fundamental traders will have to look at cash flows and balance sheets, and technical traders will have to do their homework. And you'll have to take it on the stock.
Just checking if anybody's listening.
You can just go out and say, and put out, let's say that S&P target for 2024. I don't think that's possible this year.
Thanks, Corey.
All right, Alphabet trades at 20 times forward-looking earnings, so it's not really expensive relative to the S&P 500. Last quarter, GAAP EPS of $1.55, beat by 10 cents. Revenue of almost $77 billion, beat by $1 billion. This current quarter, we're expecting GAAP EPS of $1.60, which is up from $1.05 a year ago. Company plans to restructure its ad sales team, which is responsible for 78% of all of its revenue, to better integrate and monetize the firm's generative AI capabilities. Cash flow has been strong. Free cash flow is over $77 billion over the past 12 months. That's over $2 a share. Balance sheet is strong. Almost $120 billion worth of cash. $176 billion worth of current assets. Current ratio of 2.04, which is outstanding. Long-term debt of $11.8 billion, which is easily outweighed by its cash balance. Let's go to the chart. Viewers will see a series of higher lows that ran all year long, coupled with a series of higher highs until September. At that point, resistance flatlined, and what developed was an ascending triangle pattern with a 141 pivot. Relative strength is strong, but not overbought. The daily MACD appears to have just experienced a bullish crossover of the 26-day EMA by the 12-day EMA, with the 9-day EMA in positive territory. That's a bullish setup. My target price is 169. As I mentioned, the pivot is 141. I add down to the 50-day EMA, which right now is about 133, and I panic on a break of the 200-day EMA, which is around 123 right now.
Everybody loves these Magnificent Seven. I know you have Microsoft next.
Google. Let's see, those guys talking Google. So funny.
My eye was drawn to. It's a 5-minute candle chart. You can see three of them, 132, 136. It's not uncommon that we see in that kind of systematic staircase type pattern. In this instance, it's every $4. So let's keep an eye out for a new area value to form at a higher level in continuation of this bull trend. As we move away from the 5-minute candle chart, you can see on the
All right, Mara looking for a break higher. Microsoft turning. Tesla showing a higher low. All right, the FANG stocks are catching a bid now after some profit taking this morning.
So what
Okay, starting to move in the opposite direction now. Marathon pushing a bit higher now. Alrighty. CarMax, no follow through.
Current quarter, we're looking for an EPS of 275 up from 232 and revenue of over 61 billion, which would be 16% growth. We're expecting broad business adoption of the Copilot AI Office add-on. We're expecting a rebound in PC sales that finally returned to growth last quarter. And we're expecting Azure with the implementation of artificial intelligence and large language models to continue to take share from the other cloud providers in the space. Cash flow, operating cash flow of for the past 12 months, 94.9 billion. Free cash flow of 63.2 billion over that time, which is a massive $8.50 a share. Balance sheet cash of 144 billion. Current assets of over 207 billion. Current ratio of 1.66, which is still very strong. Total debt's about 67.8 billion, of which 25.8 billion must be dealt with in the coming 12 months. Now, they have the cash to handle it, but that's just something I want to take a look at.
Intel. Nice, Steven. Intel still going. Wow. That's impressive. So buyers still coming in on Intel as it makes new highs, 52-week highs. So that's telling you institutions are continuing to gobble up shares. You got the highs over here on the left. Let's go out 5 years. Okay, you can see where Intel could go.
My target price is $460. My pivot, as I mentioned, is 384. I add down to the 50-day SMA, which is 358, and I'll panic on a break of the 200-day SMA, which right now is 326.
Okay, Intel looking good. Intel could just keep going. Okay, a little bit more. Got a lower high now on the index. SPY, a lower high. Okay, Intel looks good on the weekly. Intel weekly, you can see 52.90, 49.73, 63. Previous levels. We broke trend to start the year, broke the downtrend in March, April, May. Continued to ramp higher. They continue to see volume coming in on Intel from time to time. Options. Intel having a good day. Trending. Okay, looks good. Intel grinding along, looking good. ARM Holdings at the high. All right. Looking for a little bounce. S&P. Mara. Mara at the high of the day. Marathon Digital at the high of the day. Biotech's doing well today. Moderna. Wow, Moderna looking really good. Moderna looking good. Moderna, mRNA continuation. Moderna. Okay, looking for a push to the high of the day. Let's go to the 5 minute. 5 minute. Okay, SPY. Moderna. $60 on Moderna looks good. Nice pop on Moderna on the 60-minute. Showing you what we're thinking. Higher highs, higher lows. Speaking of that, let's go take a look at Moderna. Okay, here's Moderna on the 60-minute. You know we like to stay long above a rising 20 EMA on the 60-minute time frame. That's the case with Moderna. Let's take a look at some other names like, I don't know, Intel. Intel looking good. Intel riding the 20 EMA. Bullish above the 20 EMA when it's rising, bearish below when it's dropping. All right, RSI up to 72. Intel looking good. What about Marathon Digital? Marathon pulling away from the 20 EMA, just keeps going. Looks good. NVIDIA. Okay, you can see NVIDIA VWAP is starting to consolidate, move sideways. Let's see what Meta looks like. Meta. Okay, pulling back to the 20 EMA. Microsoft. Microsoft flat 20 EMA, looking for price to push higher. Okay, the spiders, S&P 500, obviously above the 20 EMA, consolidating for the last couple of days. But since late October, this has spent most of its time above a rising 20 EMA, so you want to stay bullish when that's the case. When SPY starts to drop and we get price below a descending 20 EMA like the far left over here, you want to be bearish. That's pretty simple. MACD's turn. Everything looks pretty good on the spiders. What about the Qs? Qs. All right, so consolidation here as well. Like over here in late November, consolidated for a few days. Now we're above the 20 EMA, consolidating again. Looking for the Qs to continue. Microsoft. Okay, looks good.
About those leaders you mentioned a few minutes ago, I was thinking while Ben was talking there, daydreaming a little. And if you look at it, Tim Cook kind of lives in the shadow of Steve Jobs, right? And the same thing for the fellow over at Apple. But Satya Nadella at Microsoft has, I think, greatly exceeded Steve Jobs. I mean, I think he has taken Microsoft to a new level, created new products, new software. I mean, although I love all three of these companies,
Okay, nice reversal, pushing higher. S&P 500. What about IWM? IWM, a lot of people are long IWM. This looks pretty good. Looks better than the other indices. What about the diamonds? The Dow Industrials. All right. IWM looks good. Continues this trend higher, grinding above a previous breakout zone. As you know, we had an iron condor on this one about 2 weeks ago. We took that upper strike off. Okay. 200, 205. We took that off and we kept the puts on for a while. Then we sold the puts into strength because they were basically at zero, meaning 100% profit on the put side of this condor. And now we're just pushing higher. So I wouldn't chase IWM up here. I'd be waiting for the next little dip for an entry. But I certainly think this is going to do well into 2024, into year end in 2024. Looks good. A lot of small cap biotechs, financials looking good. Okay, so Moderna, biotech's doing well today. All right, let's keep an eye on SPY. SPY consolidating.
Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Okay, 475 is resistance.
Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network. At each and every angle, the whole picture, everything comes full circle on Trading 360.
All right, Zim shipping at the highs, flat VWAP now.
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. Stocks basically are at 52-week highs or all-time highs, depending on which index you look at. The S&P is up 24% this year. The Nasdaq 53%. The Dow 13%, and the Russell 16%. So unbelievable, particularly the Nasdaq 53%. Here's what the numbers right now. The S&P is up 18%.
Mara. Go time. All right, pushing higher. Mara through 26. A lot of puts being sold, being noted by Corey. That would be Golf Mania.
Let's get straight to our spotlight company. We're spotlighting India. The company is targeting $2 trillion in exports by the year 2030. Amazon has already announced a $20 billion export target by 2025. For more on this, we go to Vitaly Galenka, CEO of Wealth Fund. Thank you for being with us. Tell us about the big picture so people fully understand as they think about the export market. How should we be interpreting all of this? What does it mean?
So I just want to tell you one thing that today, thank you. It's a pleasure to be here first of all, and happy holidays to everybody here. First of all, I think we have been working with the United States of America for the past 30 years, but never have seen India in the spotlight like this ever. Because India has become our sourcing hub for the world market, and I think that's a huge opportunity for all of us here in India. So when I talk about wealth fund, I must tell you that every food towel that you use in the United States is actually made by us there, and the opportunity that we see for Indian companies is huge. While we talk about India as one of the most stable democracies, the opportunity is about the market.
Let's see here.
Biggest growth button, but also biggest exporter button as well. we are one of the youngest population in the world. So we have great skilled manpower as well here too. So yes, India has become a very integral part of the sourcing strategies for most of the retailers in the United States of America. Walmart has committed 10 billion uh, from India. Uniqlo, so is Toys R Us as well, Lowe's as well. So yes, we are looking forward to this huge opportunity.
Yeah, I want to hear more about those U.S. partnerships because some people are thinking about the continent, thinking about all that and the way India is growing. To your point, you said you feel that India has never been in the spotlight the way it is now. Sheep, bath, linens, towels, curtains, things like that. And you mentioned some of your U.S. counterparts. How where can people find or to fully understand your 16 global brands that you have?
So first of all, in the United States, we basically do private label, and we also have we have licenses of Martha Stewart, and we have we do a few influencers like Peter Song, Creative Collab, and our innovations that we have, which actually contributes literally around 30% of our top line as well. One more thing I must share, our brand that we acquired in UK called Christie makes the towels for Wimbledon as well. So yes, we are present in all the landscape of the United States of America, whether it's mass retailers to the clubs, to the Costco's, and of course the marketplace as well.
And so at this point now, are there hurdles or things when you come to booking these orders, the holiday season? How is the supply chain working? How do you find the point A to point B? I'm sure it's much improved since COVID, that's for sure. And how do you see it going forward for 2024?
So I must tell you, COVID was absolutely a nightmare. After COVID was a nightmare. I must share that. For us, we have a warehouses across the United States of America. We have our offices
Okay,
in
Marathon Digital looking really good. Marathon,
as well. And as we speak, we have our data
Moderna
analytics also scaling up
continues.
and teams working very closely with a lot of our retail partners as well. And I must tell you that, as we speak here, I think it's become such a global world that, and the world's become such a smaller
All right,
place
Moderna looks
that
good.
we basically are looking at the supply chain as well. So if we are going to look at what point of sales is going to be selling, it also triggers a demand back into my factories. So, we can actually look at the turnaround
Nice
times
volume on
and the
Moderna.
interesting part is that
Shows
this
that
is
institutions
very
are
cost
active
competitive, whether it's supply
over the
chain
last 2 weeks
or
as
whether
this
it's
is changing direction.
that we can manufacture
Moderna.
or whether it's also for the flooring. I must tell you, we also do hard flooring and the soft flooring that goes along
Beginning
with it.
stages of what could be a
There is a
trend
tremendous
change
opportunity that we are
and a
seeing
move back up towards
across the
200.
factories.
50% retracement would be somewhere around 142 or so, I
So I
guess.
can give you
I think I have this
more
already.
point of sales as well.
Moderna weekly.
And so when you think about India's presence and footprint, um, this
Moderna weekly.
what's bad for China makes you good
Okay.
for India story.
Um, I would just say that India has become India is
All right, a
become
little
an
bit.
opportunity
We
for
got a
us
lower high on the index
and
now.
great great
SPY,
results,
we have a lower
and will
high.
continue to be so. But I feel the way India has grown
Okay.
and the kind of the
So
population
that's what we're
that
looking at right now on
in
Moderna.
terms of skilling, the cotton here, the whole global
Okay,
supply chain
382 would be
and the fact
121. So that's
that
30 points overhead, more or less.
the opportunities that we
30
have,
points
the
overhead.
assets, the privatization of the ports,
Okay, so this is just with a trend change. Perhaps we get to 121 on
the opportunity
Moderna.
is incredible. So I think with India being not only about the sourcing
Okay, looks good.
benefits, but also in the terms of the
Okay.
sustainability, I think India could be leading it as well. For example, I must tell you about Welspun. Our Dow Jones Sustainability Index is at 59, which must be one of the highest top 5 percentile in the textile industry itself. And we don't use a drop of fresh water in our textile operation, which guzzles actually 30 milliliters of water every day. So I can tell you that India is becoming an integral part, not only in terms of sourcing, but in terms of sustainability.
All right, let's see what CF Industries looks like. That one came to our attention this week. CF Industries, higher low, looking for it to push higher. Okay, just consolidating here. Coca-Cola, just taking its time. Coca-Cola. Warren's too busy with Oxy. Coca-Cola pulling back. Maybe he'll buy some shares here. Okay, so Kathy Wood's been pretty active on Tesla. Tesla just grinding here. All right, we're making a lower high on the S&P right now. S&P a lower high. We could see more spillage as people take off for the weekend. Got a lower high. We're below VWAP. VWAP is starting to step down, so we want to see that continue to go sideways, flat. SPY. All right, let's look at the Qs. The Qs, same condition. IWM, flat VWAP, kind of the same thing. The diamonds, the Dow Jones. Okay, so this is completely expected. We thought that volume would taper off into the holiday weekend. Really thought the volume would taper off quite a bit yesterday. Didn't expect that run up like we saw towards the end of the day. Both Wednesday and Thursday, we had these run ups into the end of the day. We gapped up this morning, opportunity to take some profits off, reduce your risk going into the long weekend so you can enjoy the holiday with your family. A long weekend. Christmas Day on Monday. Okay, we continue to fade. We've had quite a week, so Santa Claus rally coming early. The day before the weekend, we see a pop up, give you an opportunity to sell. That's what I would be doing. We've already been reducing our exposure for some time now. Okay. I'm looking, Carmen. MORF. Not familiar with the name. It does ring a bell, though. MORF. Morphic Holding. Okay, so rounding bottom. Okay, its average true range is about $1.50 a day. Bullish though. Bullish. Okay, the 200 day, I would target the 200 day. At 42, 42, 40. Mhm.
July highs, which were around 197. So what we could do here is play a continuation trade, but be less aggressively bullish, just because the mid-single digit revenue growth looks like you may cause a situation where the price action increases, but not necessarily at an aggressive pace. So we're going to essentially go out to February with 56 days expiration, and we'll put on a bullish trade, but it also gives neutrality as well by putting on a put spread, selling it, and we're going to go and sell the 195 put again, and then of course below that we're going to buy the 185 put. So this is effectively that's selling the short strike at 195 is below the breakout price of 197 and also below the current price. Now by structuring this $10 wide spread, selling the 195, buying the 185 put, you would sell it for $3 a share in credit, which is essentially your max profit. So ideally, the best position is for the stock to trade above 195 between that expiration. You got to keep in mind that your maximum risk is $7 a share with that $3 per share reward. That only happens if the stock trades at 185 or below expiration. So we just basically need the stock to stay above 195. We can go higher, that's fine. We could essentially have it trade to that level, that's fine too. But your break even also, in case it does pull back below the 185, is 192.
All right, George Dillis, thank you so much. Appreciate it. Our discussion today. Thank you, George. Coming up next, the 360 round, let's talk about what happened to Nike. We're even seeing a sell rating now. Our panel is ready.
Okay, let me take a look at ADI. I like the trade he just mentioned. The 195, 185 call spread, put spread, sorry. 195 is pretty close to the money. That's a 40 delta. I don't know if I would go for that. I would go for perhaps the sell the 185, buy the 180. That's a 22 delta, so that's still a bit high. 180, 170.
Missed out on today's market headlines? Get caught up and catch the rep at schwabnetwork.com.
All right.
Device for free.
Okay, we're putting in lower highs. Looking, do we produce a lower low and slip into the gap? It looks like that's possible on the spiders. Here's the gap over here. Eyeballing that. We've been mostly sell signals this morning after the gap up and went sideways. We got our first sell signal at 10:50 a.m. We got 10 minutes to go for lunch on the East Coast, the best coast. I'm your host, Kazavetti, coming to you from theclosingprint.com. It's Friday the 22nd. Been a rather slow morning. We completely expected volume to taper off. Exactly what we're seeing. Block trades, we only have about 6 on the SPY, 4 or 5 on the IWM, and 4 on the Qs. That's very, very low block volume. Most of the trades are below 260,000 shares per block. And that 260K, those are SPY blocks at 473.77. That was earlier. 474.26 is a 192,000 share block that traded near the high. Okay, we're just watching the index. Okay, so London markets are closing now. Okay, London markets are closing. VIX is sinking. All right, so maybe we get a little lift here. Tesla looking for the bounce. All right, so Coinbase picking up a lot of customers from whatever the name of that company was. Man, what a sold it too soon. Coinbase. Kathy Wood selling into strength on Coinbase. Look at Coinbase. Sold it back here, I believe at like 98, 100. No, it was 120 something, right? 120 something. Still going, Coinbase. Wow. Look at Marathon. Marathon going, space shuttle. Man, what a nice trading day. All right. Netflix pulling up a reversal now, starting to move. Netflix. I've been wanting to get back into this one, credit spread, but it's just kind of sitting here. Maybe a butterfly, butterfly, where we're looking for a price to stay near this area. So you would sell two calls at the money, buy a call below and above, creating a butterfly for a trade setup. Watching the S&P. VIX continues to drop off now that we've got the London and the European exchanges closing. Okay, watching for any kind of uptick in some of these positions like Meta, a bounce. It's off $1.27 right now, looking for a bounce. Tesla turning the corner, it's up $1. Microsoft is up $1. Looking for more follow through in Microsoft than we've seen thus far. Microsoft just kind of languishing here for the last 3 weeks, just sideways along the 21 day. RSI is above 50. So if I were to take a bias, I'd be looking for a push to the upside. MACD, you can see, is making shorter histogram bars, and stochastics is rising. So watching Microsoft putting me to sleep, looking for Tesla to get above these pivots. Tesla gets above 260. That is the next call wall. So 255 right now is the call wall that's supporting price. So if you understand what I'm talking about, you got 255 is below us. So what does that mean? It means that anyone that had calls at 255, it's in the money. So probably a lot of people took profits. Maybe they rolled some up to 260. I haven't looked at the volume today, but roll up to 260 maybe. That would be the next level of resistance, 260.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services.
All right, seeing some
On any device for free.
call credit spreads being traded 475, 4775, 4800 for this next week. $1 million trade there. S&P buy the 4810 call. Buy the 4800 call above the ask. All right, so this looks pretty interesting.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and options today. Tesla rallied over 100% so far this year, and Uber, which is up 150% in 2023, after joining the S&P 500 earlier this month. Michael, we're going to continue sentiment data on Coinbase.
Somebody's selling the 4600 put S&P 500 February. That's a $1.82 million trade. I would think the market stay above 4600.
Data deluge today here and it did seem to negatively affect stocks. I thought the outlier was durable goods, really strong number based on transportation orders.
Yeah, I thought the durable goods number was hot, not warm, not hot. It was hot,
But that's a volatile number.
well, the headline is
Yeah.
for sure. But the other two, ex vehicles, core capital goods were still warm, still good, solid, strong numbers. But it was muted at first by the core PCE number. But the open steel, they spiked lower and then kind of started to grind higher, which means some of the sell-off, some of the anticipation of inflation was already
NVIDIA. Okay, looking for a follow through. NVIDIA. Excuse me. So where'd that come from? NVIDIA. Okay, turning the corner here. Watch NVIDIA. Oops. Okay, NVIDIA. Okay, NVIDIA. What's up, dude? Did you eat? What'd you eat?
Red sprinkles anyways, so it doesn't matter.
All right, man.
All right, babe. What?
No, it's okay. Number one son visiting the office. Okay, we're just talking about his account growing nicely. We started a trading account for my son a week and a half, 2 weeks ago, and currently he has accumulated $478 on his $1,000 account. We're using mostly credit spreads. That's all I've done with him with credit spreads lately. So he's made 50% on his almost 50% on his account in 2 weeks, I guess. So we're trying to double his account from $1,000, a small trading account, to $2,000, a small account challenge, basically, with my son, to show him how credit spreads work and how he doesn't really need to pay attention too much. Just check it in the morning, check it in the evening, do a little analysis over the weekend. He currently has a Tesla 235 230 put spread that expires on January 5th. He's had that for a week and a half. No, for a week now. Got it last week on Friday, I believe. That credit spread, let me see real quick, is up nicely today. Okay, let me see who this is. Let me check this call. I'll be right back. Cold call from a realtor trying to get me to sell. Not interested. 3% mortgage. I'm not going to do anything. I like living on a golf course. I've always wanted to live on a golf course. It's really nice having 300 acres of just green behind you. Walk out on the golf course at night. We take a walk around the, was it 7th, 8th, and 9th holes and come back to the house in the evening sometimes when the sun's setting. It's kind of cool. Nobody's out. The club is closed. Haven't been on the course in a while, so I need to start hitting some balls. Okay, NVIDIA. I have an NVIDIA credit spread. I'm looking for that to continue higher. That spread will expire the first week of January. So theta will be kicking in. Okay, theta is $20 a day on these NVIDIA puts that I sold, the 490 put. What? That's not right. That's not right. No, I sold the 460. I'm like, what? What? I didn't sell the 490. Okay, when I open the trade and probability calculator, it automatically filled in the current prices for a credit spread. But last week we sold the January 460, 450, and we got shaken out. What was it on Wednesday? Got back into the same trade, 460, 450. And that's up 20% at the moment since yesterday. I've been doing a lot of credit spreads over the last, I don't know, 8 years or so. A lot more in the most recent run up, as it's easier for me to broadcast and not have to worry about my positions. As long as I have like a 17 or an 18 delta, my sweet spot's between 17 delta and 20. I like to sell right around there and buy like a 7 delta below, usually about 5 handles, and anywhere from 150 to 250 per contract credit, as long as the position does what we think it's going to do, like NVIDIA just stays up here or moves higher. Even if it moves a little bit lower, I got a ways to go to get down to 460. 460, of course, is down here below the 50-day moving average, so I don't think there's a chance in hell that we drop 30 points on something like NVIDIA, too favored a position by institutions in the months and years ahead. So NVIDIA is something that I'll just continue to sell credit spreads on, consistent income. As long as you're selling like a 17 delta, you got about an 83% probability. So 2 out of 10 trades, you might have to pay attention. When we had that high vol day on Wednesday, that was caused by 0-day options. We knew that towards the end of the day. We didn't know it at the time when they started to pull back. So I got shaken out, got back in the next day, same trade at a better price actually, and because those puts increased in value. So that's NVIDIA. Tesla, I have a credit on Tesla as well. The 435, 430 on Tesla, and you know that I'm sorry, 235, 230. Did I say 240? 235 on Tesla. And that expires on January 5th as well. Okay, so I have the 235, 230. That's up 20.8% since we took that. Tesla got shaken out of that one too on this big move. Risk management dictates that if I'm off 20% on a position, 20 to 30%, I definitely look to exit. In the case of a credit spread, I was still at a credit, just a smaller credit than what I had originally sold it for. So let's see if I have NVIDIA here or Tesla. A couple of recent credit spreads. Let's see, what's this one? This is Zim integrated. That's a vertical. Okay, Mara. That's a credit spread. That's doing well. Mara is up 26% since we took that trade. I've had several credit spreads on Mara over the last 3 to 4 weeks as Mondo started to give us updates on Mara. I started doing credit spreads. I had call verticals, but then I decided, let me just go ahead, make this easy on myself. Okay, Marathon Digital. So as this is moving higher, those credits are working magically over the last 3 to 4 weeks. I've had like three trades. The first trade on this breakout was a vertical. That looks good. The volume right here on Mara looks good. Okay, let me just change this banner. Mara. Okay, so Mara looks good. So I took a credit spread on Mara again because this is working really well. That was $125 per contract. Now you look at this number 750, you might say to yourself, "Oh, that's a lot of money to risk." But you can see where price is right there. When I took the credit, it was 24.43. Where's price right now? Just around 27. So you can see how quickly this can move against the person who bought the puts, working in favor for me. You can see right there at 33.88, that would be a max level there. We're watching Theta. Theta is $4 a day when I took the trade. It's probably about 6 now. Implied volatility a little bit rich because at 138%, this could go either way. This could drop very quickly, which as long as I stay above this vertical line over here on the left where it says MG, that's my max. I'm still at a max gain. I keep my credit. Okay. What's this one? All right, that was Okta. That was a credit spread that we did when Okta started to move. And this is Snowflake. That was a credit spread we took on Snowflake. That was $1 per contract. It's about 20% on the money that we had allocated. A little bit less, maybe 17%. That red number there, that's just margin that the broker will hold on to. Money that I can't trade. What is this one? That was Enphase. Enphase, I did a credit spread on that one too. You can see where our entry was on Enphase. It was right around 121.50. Where's Enphase right now? Enphase, ENPH. Okay, we entered at 121.50 last week, and this continues to move away. So that credit spread is becoming worthless to the person who I sold the puts to. It's more valuable to me, obviously, as price action moves away. So I like selling credit spreads because I'm broadcasting. I can't pay attention to 12, 15 balls juggling in the air all the time. Probably easier for me to keep an eye on 15 positions. But all right, Meta pulling back a little bit more. It's off almost $1.90 at this point. $1.90 exactly. Okay, Microsoft pulling back. Okay, so a little bit of more selling coming in. Marathon Digital going vertical. Look at that volume. Wow, Marathon looking good. True. Okay, Marathon looking good. Microsoft giving back most of the morning gains. It looks like people just taking profits off going into the long weekend, off on Monday for Christmas. Enjoy these long weekends. I don't take many days off, as you know.
Yeah, I think that's a, that should be maybe the theme going into 2024 is, hey, earnings better back up the valuations, and then the consumer, does the consumer remain robust? Is the job market going to be robust? Kind of supporting that theme with a couple ideas to look at in 2024. All right, Joe mentioned Tesla. We're going to talk about that one next. Stocked up over 100% so far this year. Increasing margins.
Okay, Monday is December 25th, Christmas Day, so we'll be off, taking the day off. I'll probably thinking about the video for next week. Might do it later in the day on Christmas Day, so I can enjoy the whole weekend. Okay, so that looks good.
On Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
It's time to move forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next gen.
Available anytime, anywhere, on any device. For free.
Okay, credit spread I have on Microsoft's doing okay. It's sold the 365, bought the 360. Microsoft just hesitating getting above 375. It's $1.30 off of that level right now. Still green on the day, Microsoft.
Anytime, anywhere, on any device for free. Schwab Network.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Kickstart your morning with a total commodities technical analysis.
Okay, so we're holding the gap for now. S&P is holding the gap.
Available anytime, anywhere, on any device for free. And available on all.
Hope everyone's having a good day. Oh, you know what? Let me shift gears. Let me go listen to what they have to say over at CNBC.
VMware deal. Actually, by 15.
All right, I'm going to take this headset off for a few minutes.
It's 30% accretive, and it gets them 50% software exposure, recurring revenue. So when I said specific special situations for 2024, this is a special situation kind of story, in addition to why it has rallied year to date because of AI and them doubling their networking business throughout the AI channel. So to me, I like it a lot. The story kind of changes though for 2024, which is again one of the reasons why I'm staying with a big position.
So as we're having this conversation about are certain stocks too extended, Nvidia, Broadcom, you mentioned Meta. I'm sitting here and
So I
I'm
can
looking.
name 200 that
Right,
gains
but-
that are
but-
insane.
right. Okay, that's fair. But I think you would agree those are three stocks where you think about them, they're kind of all stars for 2023, and they're certainly very popular names for people to be invested in. Each one of these stocks, relative to their 200-day moving average, is 20% above it in terms of where price is. And in the case of Broadcom, it's nearly 30% above the 200-day moving average. I'm going to cite that for a reason, because if you study technicals, the sweet spot generally in a bull market to be above a 200-day moving average is 11 to 15%. So without question, when you're 20% above a 200-day moving average, and in the case of Broadcom, nearly 30%, you are very overextended.
All right, so we're going to take a break. When we come back, we're going to talk about a stock that Jim Leventhal says is time to lean into. We also have calls today on the banks, on BlackRock,
Regeneron, and the one that Jim is going to tell you about next.
All right, I'm going to make some lunch, folks. I'm going to make some lunch.
Welcome back to Fast Market here on Schwab Network. We're talking Tesla. Shares are up about 107% so far this year. Cap Dan Ives, the Uber bull that we have on the network occasionally. Put price target of 350 on this one, 310. Says if you can get to $1 trillion market cap in 2024, he's still bullish, but he's always bullish on Tesla.
The question is for Tesla this year, and it's one of the Magnificent Seven. It's one of the charter members, so it's in play with all these other names. But what's the demand for you, right? Is it going to be enough? He's going to be the leader, right? Is it going to be enough that you can get margin to go back off? Because he's made his play to get market share. He's done damage. Remember, you're starting to see some mea culpas from some of the leading car companies, like pushing back.
Ford was one. They're pushing back production.
To hybrids instead of pure EVs. Yeah. They're doing other things. So, but what's the self-driving software? Remember, that's $12,000 a car for self-driving, and people are paying it. So, I think the problems are valuations. Does he continue to lower prices? They don't like that in the stock. Right. So you got to see some numbers. If the numbers show up in sales, then these price cuts and the competitive advantage he has will start showing up.
Yeah, his margins have come down, but as I mentioned, they're still above the others like Ford, GM in this space, Joe. But Kevin brings up a good point. Is this all going to be about the consumer still wanting electric cars at this point, or are they going to run out of money where they actually can't buy new cars? Is that going to be maybe a theme in 2024? Your thoughts here, Joe?
It's a theme in 2024 for all durable goods, right? I mean, the last print looked good today, but we have to think going forward. So yeah, it's a story for Tesla, but it's a story for all the automakers. The only difference is Tesla makes a monster multiple where the other ones don't. I mean, that's the bottom line, right? Of their first mover multiple that they get. Happens to line up with that QA strike. If you look at the skew on
loan balance is up 15%. Delinquencies only up 50 basis points. Net charge-offs actually down 70 basis points. So these are really good numbers, and that stock trades at 16 times forward. So I like that one as well.
Jimmy Festive's been telling everybody he knows to buy Citi. Right? I have. You're making the case. You like what Jane Frazier's doing.
I really do. I've actually liked what she's been doing all along. I mean, she's been in the driver's seat for 2.5 years, but the market for the first year and a half really didn't give her any credit whatsoever. Maybe that's because they didn't focus too much on the international operations, which she spent the first 18 months rationalizing. Now she's going hard at the domestic business, hard. She's cutting expenses. She's cutting unprofitable businesses like the municipal bond underwriting and distressed debt trading business. I like what we're seeing here. We're getting a lean, mean fighting machine out of Citigroup. And frankly, the analyst community is starting to take note. So I like what I see here.
Joe, Morgan Stanley is the one you leaned into.
Yes, I'm back at Morgan Stanley. I'm trying to correct my mistake of selling out of it in October. As I said the other day, I think the destination is well above $100. The business is well diversified, and the wealth management business has been executing perfectly over the last several years. I've owned Bank of America for many years. I sold that in October. Steph, you mentioned Bank of America, and I immediately think the distinction between Morgan Stanley's ability to really utilize the wealth management business to drive the revenue growth, and then Bank of America. And I just think there's a crown jewel embedded in Bank of America, which is Merrill Lynch, and they can't seem to have the same type of similar realization that Morgan Stanley's having with their wealth management division. I'd love to see them address it. That would clearly drive me back into the stock.
Speaking of asset managers, BlackRock, top 2024 pick at Evercore ISI. Outperform price target goes to $860 from $825. Those shares are up 22% in 3 months. Farmer Jim.
You know, sometimes the investment thesis just becomes so simple. I almost wonder if I'm simplifying it too much, but this is a business that makes money through fees on assets under management. Just a second ago, we were talking about S&P 500's up 15% over the last 2 months. I don't think anybody had that in their operating model for BlackRock. And by the way, as we've also talked about, it's been an everything rally. Bonds have rallied as well. Now, that may not continue at that pace through 2024, but I certainly believe the financial markets are going to be strong and healthy throughout 2024, which means earnings are going up because fees on assets under management are going up. Assets under management are going up. It's that simple.
Joe, Regeneron today gets its target to 1125, excuse me, from 1050. That's at Oppenheimer. Outperform you on that.
Boy, that's a long way to go. I mentioned before, the distance between the 200-day moving average. This is a stock that we added to the ETF in January of 2022. So we've got a 40% gain. The stock is up 16% year to date. This is a reasonably valued healthcare company at 24 times. This is a company that has a market cap of close to $100 billion. I don't see anything in terms of the revenue growth or deterioration in the balance sheet that would drive us out of the position. The momentum is well entrenched, and I think the setup for 24 is a strong one.
So CVS Health is the one that we teased in the before the prior break. The one that you said it's time to lean into and buy.
I really do believe
price
that.
Target goes to 94 at HSBC. They agree with you. That's 22% upside, underachieved, attractive, and underappreciated, attractive, and undervalued.
Here's what happened at CVS. From 2020 through 2021, the stock doubled. And then a whole spate of bad news came out. You had the CMS Stars rating on their Medicare Advantage plans come in badly. That was about a year and a half ago. Then Mark Cuban won a Blue Cross account. And then there were questions about the acquisitions that they've recently made of Signify and Oak Street Health. All of that negative sentiment has reversed, and it's for good reason. The Medicare Advantage Stars ratings have gone up, which increases their profitability. The investment community understands the acquisitions much better now. And the new business model that they put out a month ago of how they're going to price their pharmacy benefits management systems, that has the street realizing that profitability is going up at a company like this that is underowned and undervalued at 9 times earnings and a 3% dividend yield. I think this is going above 100 by the end of next year.
Okay, let's get the headlines now with Pippa Stevens. Hi, Pippa.
Hey, Scott. The United Nations Security Council is voting now on a Gaza aid resolution after days of delay. The U.S. and Russia abstained. Notably, the resolution calls for steps to create the conditions for a sustainable cessation to hostilities rather than just a suspension of fighting. It also calls for the speedy delivery of aid to civilians in Gaza. The Department of Transportation is reportedly probing the frequent flyer programs of major airlines for deceptive or unfair practices. According to Reuters, the agency is looking at whether they are transparent about booking award tickets, transferring miles, and giving notice before making changes. The government is also examining whether miles are devalued over time, making it harder to book award tickets. Major U.S. airlines have yet to comment on the report. And today marks the annual pilgrimage to Stonehenge for the winter solstice, the shortest day of the year. Each year, thousands descend upon the ancient monument, which is thought to date back 5,000 years. Scott, back to you.
All right, Pippa. Thank you, Pippa Stevens. Up next, we're hitting today's top stock stories, including a big deal in the healthcare space. Stephanie Link loves it. Why she now has that name on her radar is next.
All right, I'm here with you guys. I'm just eating lunch.
trading at a higher price than they typically do. So I'm taking advantage of that. That reduces the cost of this call spread. Now this thing still needs movement, right? So it's not like when we're selling credit spreads and doing at lifetime spreads where it kind of sits still. You need about a $6 or $7 move to the upside for this thing to break even from where it's at right now. But the idea is if you can get that move, or excuse me, a little bit more than that now, we're back down to 255 change. So you're going to need about a $10 move to the upside. But if you can get that move over the next 30 days or so, the other thing I look at from the technical side is kind of breaking out of that longer term downtrend that we've been in since July. And if this momentum continues to grind up towards that 280 strike, we'll do well for this type of trade.
Yep. Let's break this one down. Going on to the January 26th weekly cycle, so about 35 days till expiration on this one. Buying the 260 call, selling the 280 call. Having pretty straightforward $20 wide bullish call vertical, paying roughly about 670 debit. There's your risk, $670 per spread. Break even 260, 670 to the upside. You don't need a massive move, about $11 from these levels.
Long bigger because both options are out of the money. But here's what Joe is talking about. Right now, the current IV implied volatility of the 260 call is 48.9, and the 280
Markets are just flat going into the long weekend.
in terms of the IV for that at the money to out of the money. That means what Joe is describing here is there's a bit of edge in this trade, right? It's the better value to buy the at the money, sell the out of the money if they're flat like that. Normally that skew would drop off on those out of the money calls to a certain extent, and then it would curve back up. But yeah, you can buy a flat skew in a $20 spread. It's pretty good.
Right, Joe, when you look at this, when you buy a vertical like this, as opposed to somebody might go, well, hey, Joe, why don't you just buy, the 260 call if you're bullish on Tesla? Give us a reasoning, because those calls are highly correlated, right? But what if Bitcoin continues to kind of gyrate around the current levels? Because I always think Coinbase does well.
Pipeline going forward in the out years. Stock's down 26%. Trades at like 8 times earnings. That is a 4.6% yield. So I think that is really interesting. Healthcare, as you know, has lagged all year long. And I think that maybe you can have a catch-up trade next year.
Jimmy Festive sold this last week. Do you regret doing that?
No. I mean, I'm becoming less festive just thinking about it, honestly. Sometimes you leave a stock and it's like a breakup and you just never want to have anything to do with it. Nike, I'll come back to. We'll talk about it. You want to put up that chart again? That chart was ugly, and that's what I felt
that's why
this year.
Steph sees opportunity.
You know I'm the king of that, and I wish you well. I really do. I just want to have nothing to do with this stock. I mean, it's been cheap forever, and it's gotten nothing but cheaper. And there's other places to play in the healthcare space. I got in United Healthcare, which also had a bad year. So that's my regression to the mean stock is United Healthcare.
All right.
Okay.
Buffett's buying more Berkshire. Laura Oxy. Berkshire's buying, now they own 28%. They bought another 5 million shares.
Is buying a lot of the shares since the recent announcement for the $12 billion deal with Crown Rock that gives Oxy more exposure in the Permian. There's so much that I have to say and feel regarding energy, because I said coming into the quarter, this is a make or break quarter for energy. And it's interesting because my feeling is that what's going to happen at the end of January is if we pare back the allocation to energy, I really believe, while the rules are going to say to do it, I think that probably is going to be the wrong move, because what I'm beginning to see is that you are getting a divergence, and the divergence is warranted between the spot price of oil and energy equities. So in this quarter, spot oil is down 18%. Energy equities are down 5%. I think the reason for the divergence is that you're realizing that these companies are more efficient. These companies are going out and identifying areas of opportunity to increase production through deals. We've seen that with Chevron and Exxon and Oxy. M&A activity is beginning to stimulate in the energy space. And I almost think if you're investing in energy, stop looking at the price of oil. Because the price of oil today at $73.85
is in the exact same spot it was in July of 2021. It's basically gone nowhere over the last 30 months. So it's about energy equities themselves.
Okay.
And I think that divergence is good, but we'll see what the strategy does at the end of January. It might be a fake out in terms of what we do.
Steph, you take the Oxy additional buy as yet more evidence of why you like your holdings in that space.
Sure.
SLB and FANG.
Yeah. Yeah. So I sold Chevron and I put that more money into SLOB and into FANG, Diamondback Energy, because I like those two stories very much, and they're very cheap at this point in time. And the Schlumberger is the number one player in oilfield services, and you're getting it for 17 times forward estimates. It was flat on the year. They raised guidance all 3 quarters so far this year, and the stock hasn't really done anything. I think that the technology innovation is so incredible and underappreciated. So that's the one, if I'm inclined to add to either of these two names that I own, I'd still be buying even more. And it's a pretty large position.
Okay. Coming up, the committee looking to make more money in the metals. Gold is breaking out again. Jim turning up the volume on one corner of the metals market. We'll bring in the trades. And Mike Santoli joins us with his midday word next.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
When there's volatility in this name, and not maybe not the moves themselves, but the volatility within the moves, the sharp moves that we've seen, whether it's to the upside or the downside. We've had great gains here, so not surprising to see Coinbase up. But what if we just slow down and grind slightly higher? Is that going to hurt Coinbase? Because this is all about transactions, right?
Yeah, it's all about transactions. So I think you're right. Volatility is definitely a friend of Coinbase to a certain extent. They don't want customers blowing up. I think that the last year has been kind of that perfect storm.
Senior markets commentator Mike Santoli at the table with us. All right, end of the week. What's on your mind?
There's some sense in which the strength, the bid in the market can kind of seem like a victory lap. We did it. The PCE number told us what we were hoping to hear and what we expected to hear. But I think if you dial it back, the market has set itself up. It's hard to find real flies in the ointment. As Treasury yields have crashed, investment grade credit spreads have also been going down. I mean, it's not as if the spreads are holding up, which means just cost of capital going down. You have the S&P at the same place it was exactly 2 years ago, ahead of the big Fed tightening cycle. Now we're on the other side. So it's just tough to really quibble that much, except when you see a little signs of margin pressure in individual companies and sectors. When you start to see maybe some consumer fatigue, how much are we going to step down economic growth, if at all? So I think those questions are going to hang over this market for a while, but I don't think that we're somehow precariously perched going into next year on risk.
FedEx and Nike, in other words, not enough yet to throw anything overboard.
I think that's the way to think about it. Now, I'm looking at things like overall discretionary performance relative to staple, overall higher beta stocks relative to low vol. So the kind of risk appetite tells and the cyclical indicators are still telling you that we're okay on that front. But I mean, you don't ever want to dismiss FedEx and Nike.
Google moving back above VWAP. Note the volume. Still got a flat VWAP. Watching the SPY. Potentially an ABCD pattern here.
But don't get consumed by the word.
Yeah, all right, good stuff. I'll see you in a couple hours. Closing bell. It's Mike Santoli. Up next, we'll give you the trade on gold. The metal's nearing a 3-week high. We'll find out where the committee sees the biggest opportunities in the year ahead in 2 minutes.
Microsoft moving back above VWAP as well. So it looks like we got a little bit of a bid in some of these FANG stocks that dipped early in the morning.
Yeah, and just real quick here, Andy, stocks up nearly 400%. I mean, do you wait for a pullback in a day like this, especially when Bitcoin's kind of consolidating here?
Yeah, I like Coinbase a lot. I don't think you can go wrong buying it. But then again, I'm very bullish on Bitcoin. Going forward. So that's the baseline that you have to have. If you're bullish on Bitcoin, then I don't see any reason to wait to own Coinbase. But if you're looking for a pullback, you might actually set up your targets or your watch list based on Bitcoin price more than on Coinbase price and say, if Bitcoin pulls back to 32,000, I'm going to take a look at Coinbase if it's pulled back as well. That could be a decent strategy.
High tick alert plus 800.
All right, high tick alert. Watch the S&P now. S&P 500 moving back towards VWAP, back towards the highs. We're right at VWAP now. Watch for rejection or follow through. Just having lunch. I'm here with you.
Weekly gains, gold and copper, fifth positive week. Joey in 6. You got the GLD, Freeport, Newport, Steel Dynamics. It's playing the disinflation trend that's obviously present in markets right now. I think the false premise is that you buy the metals, specifically you buy gold in an inflationary environment. That's incorrect. As disinflation accelerates, you want to have ownership of the metals, and the disinflation is intense right now in Asia and other areas of the world. It's going to be imported here to the U.S. I feel very strongly about. I want to talk to you for a second, Jimmy, about steel. If the Nippon U.S. steel deal is off, if it doesn't happen, right? Let's just say, for argument's sake, it doesn't happen. Do you want Cliff to be back in the game?
It depends on the price. He's not going to pay any price, but he can certainly. I'm talking about Lorenzo Gonsalves. He's the CEO. Obviously, there's a company behind him, but he can certainly wring out synergies. And I'm doing this from memory, but I think he projected $500 million a year of synergies if they do combine. He's obviously lowballing that. I mean, he's done so many M&A transactions. He knows to lowball it. So it's a higher number than that. But remember, his initial offer was $7 billion. It's now being taken out at $14.9 billion. So I mean, the price has to come down quite a bit. All that said, there's a lot of noise about this Nippon deal, and there should be.
Well, of course, Congress is upset about it. National Economic Director Lael Brainerd made comments, last evening. We asked her about it this morning on Squawk on the Street about concerns. I haven't heard anybody come out and say, "Hey, we love it. Let's do it." At least from the U.S.
Here's the one
government-related side.
One mitigating circumstances. It is being bought by a country that is a strong ally of the U.S. Right? I mean, this is not really a national security concern. I think probably it gets done, but there is hair on this deal. There's no question about it.
Steph, how do you see the space?
I'm not involved in steel, but I am involved in Freeport for copper, not necessarily the gold component. But I like it for the infrastructure build out, and I think the supply demand metrics in copper are very tight, and input costs are coming down. That'll help their margins. So I like that one.
All right, we'll take a quick break and come back. We'll talk about why next year could be filled with boardroom battles and activist attacks. Our Leslie Picker following the money there, so join us next.
The other details here, because the stocks got into the S&P 500 because it had 4 quarters of profitability on a GAAP basis, at least, right?
That's right. I mean, it's important to bring up. It's profitable on a GAAP basis, so all the exclusions and one-time items aside, they are making money. And one of the things about the S&P,
All right, watching the indices. IWM doing the best. It's a nice follow through. IWM. Flat VWAP, but pushing back above. Watching all the FANG stocks. Those caught a bid about 30 minutes ago. Off the lows of the session. Still, we have 6 of 10 of the New York FANG index. 6 of 10 are still lower. Meta trying to reverse back above VWAP. VWAP is just overhead. Watching Apple. Most of these reversing. Off the lows, looking for a push back to VWAP. Netflix, turn the corner. Netflix. Flat VWAP. All right, just no momentum again. Yesterday we got momentum later in the day. Maybe we see that again today. S&P 500, we have resistance overhead at 47.75. So while I've been taking less risk into this long weekend, taking profits off into strength, market's still hanging in there. So that's a good sign. 47.75 is resistance overhead. 47.50 is support. All right, SPY is and the S&P is still pushing. IWM doing well. Small caps. Tesla pushing a bit higher.
What impact, if any, do you think the run in the market has had as we make the turn into the new year? And let's just, for argument's sake, say that we have another strong start. Is that better or worse? Okay, the All-Stars are out full force, too. Nelson Peltz among them with Disney, Jimmy, which you own. That's probably the most high-profile one that we need to keep our eye on. By the way, that stock gets reiterated a buy today at Bank of America. Your commentary, though, to the producers today I find interesting. Stocks are up, breadth is expanding. I don't see opportunities for them being activists, yet you were making the case quite loudly that you were supportive of Mr. Peltz and the stock that you want to see go up.
Yeah, I hope I phrased it properly, which is to say this. When I woke up on that day that he announced he's doing a proxy fight, I didn't wake up saying, boy, I hope Norman Peltz does this. Having said Nelson Peltz, sorry. Having said that, once he announced that, my feeling is there's only upside. I mean, it can't hurt. There's only upside to a couple of his nominees being on the board. So that's the point that I was trying to make. And I do still support Mr. Peltz in that endeavor.
It's interesting to hear from a shareholder think that the presence of an activist means there's only upside in the stock, which emboldens them to have more campaigns.
Yeah, I think it depends on the stock, of course. It depends on the activist specifically, because sometimes if you're a management team, you would see the presence of an activist as being a distraction, which can be an issue if you're looking to do a certain strategy and then all of a sudden you have to deal with a proxy fight and that's costly. So activists have a longer time frame.
All right, just watching the markets chop around. S&P flat VWAP, so there's no momentum. We could get back up to the high or revisit the low and still stay within this standard deviation 2 VWAP bands and right below resistance, above support. That's what it looks like we're going to do today. All right. Market's just sitting here chopping around. Not much direction.
First off, obviously the market share is important because Uber effectively operates internationally. They have, like I said, 3/4 of the total rideshare market in North America. So the biggest competitor next to them is Lyft, but Lyft only operates in North America, not the U.S. and Canada. So when you talk about the global aspect of Uber, they really have a lock on the global market. There's of course other competitors to Uber in foreign countries. Nonetheless, I think the domestic rideshare, preeminent market share is one of the reasons they've actually gained scalability. And so, with that said, they're operating in lower cost structures as they've improved their
Closing bell, 3 o'clock Eastern. I hope you'll join me because we got a great show on this Friday. Dan Greenhouse joining, Alicia Levine with me, Kevin Simpson, new trades, Chris Collins. Can't wait for that because we're going to talk about this Peacock holiday exclusive game that we've got in our family, Bills Chargers, and the exclusive wild card game as well. So we got a lot to talk about. 2 games coming up tomorrow, these holiday doubleheaders, and a lot ahead. All right. We also want to introduce the newest member of our halftime report. Family is the best news of the whole thing. Our all-star producer, Kara Caruso, and her husband, Arthur, welcoming their beautiful son, Roman, into their family and into ours. We are happy to report that mom, dad, and baby are all healthy and happy. Congratulations. Final trade real quick. Give me a name. Trades Ocean. Diamondback. All right. Get it close together. Same stuff right now.
I'm John Ford in for Kelly Evans, and here's what's ahead. Fresh off her chat with Elon Musk, Kathy Wood joins us live to talk Tesla and her outlook for next year and what she's buying based on it. That interview is just minutes away. Plus, a read on the consumer from the CEO of Barnes & Noble. A third of business is generated in the last 6 weeks of the year. But is the consumer on track to deliver that this year? We will ask. We continue to highlight the 2023 calls that worked and analysts who made them. Today, an early upgrade on the medtech game despite disruption fears from weight loss drugs. The stock's up more than 30% since that call. The analyst joins us with the name and another one he is bullish on now. But we begin with today's market. That means Dom Chu. Got some numbers. Dom.
We got some fractional gains. It's green across the screen here for the major indices, John. As you take a look right now at the intraday action for the Dow Industrials, currently up just about 0.2%, 37,469. The S&P 500, 4764, up about nearly 0.5%. Same story for the Nasdaq Composite, which currently sits at 15,022. Now we are just a stone's throw away from record highs for the Dow, and then the S&P 500 and the Nasdaq Composite for highs for the year. So we'll continue to see if those levels kind of hold around these particular moves. And some of the green that we were seeing on the screen here. Check out what's happening with healthcare, specifically with regard to pharmaceuticals and biotech. A couple of headlines driving things today. A big deal, $14 billion worth for Karuna Therapeutics, which has agreed to be bought by Bristol Myers Squibb. Bristol Myers is up 2.5%. Karuna up about 48%. It's been holding there. The deal is for $330 per share in cash. So there's a higher likelihood, according to the market, this is going to happen. Just around $317.
All right.
Schizophrenia drug in the experimental part of the reason for that deal. Amgen is being called a top pick by Jefferies.
Amgen. Okay, let's take a look at Amgen.
The iShares Biotechnology ETF, the Spider Biotech ETF, both you can see anywhere up from 2.5% to nearly 4% right now. So keep an eye on biotech. And then the stock of the day, a massive move lower in shares of a Dow component. Nike, the athletic apparel footwear maker, down 11% right now, just kind of hovering near the lowest levels of the session so far. It was a mixed report. Earnings came out last night better than expected. Revenues were a slight miss, but it cut its revenue forecast for the year amid some slowing concerns about consumer growth, especially in the greater China region. So Nike shares down 11% right now. A bit of a drag, but the Dow's still in positive territory, John. I'll send things back over to you.
All right. Instant Karma's going to get you sometimes, Dom. Thanks. The Fed's favorite inflation gauge showing prices rose at a 3.2% annual rate in November, just below what economists expected. Headline PCE was up 2.6% from a year ago.
All right, I bought some shares to track this with you, Mondo.
Since April 2020. As inflation fears ease, my next guest sees 3 rate cuts ahead next year. Tom Porcelli, PGIM chief economist, welcome. Also with me, CNBC's very own Steve Leisman. So, Tom, sluggish growth you expect in 2024? How does that factor in?
We do. So, this
little bit because, yeah, you probably avoid a recession. Again, I think it'll be close, and I think there's some risks out there that are certainly worth talking about. But if our base case of weak growth materializes, so call it around 1% growth, for the reality is for some people that's going to feel pretty recessionary. And then I think about, okay, well, then what can you do to get you out?
Mara continues to move higher. Marathon Digital.
It's going to really be hard to sort of find some fiscal stimulus to get
Marathon doing well. Excuse me.
for the next year, maybe two. I do think that there's a catalyst out there waiting for us. That's a productivity. I've said many times on here and elsewhere that I think that the pieces are in place for productivity to sort of perform really well, but that takes time to develop. So I think for the next year or so, I think things could feel pretty soft.
Things feeling soft, though, Steve, could actually be pretty good based on what people have been expecting. And this PCE number, could it have been better?
No, I don't think so. But, what Tom is saying has a lot of truth to it, which is the following, that the economy, the growth, the local potential is out there. The pie is not as big as it should be or could be.
Nice.
Going to be getting a little bit less.
Nice. Nice trade, Steven.
For today, which is we do see the data we have today, the durable goods data, and some other data that we have the first week of the spending numbers. People are revising up the fourth quarter forecast. I know that's what I'm talking about, but it's just worth putting in there. I've seen a forecast for the fourth quarter, which was supposed to be, again, the slowdown from the torrid third quarter, which was near 5%. Now we're looking at Q3 versus somewhere between 2, 3, and 3%. Still early days, still a lot of data to come, John. But the point is that is an economy that's going at or above potential. And the only thing that I completely get
S&P continues. S&P continues higher. Mara. Wow. Mara's nice. Mara just keeps going. VWAP up into the right. Volume keeps picking up. Mara. All right, so we're holding right below resistance around 476 SPY, about 47.75 on the S&P. Cash.
And so if I take a step back, knowing that, if I look at the change in jobs over the course of the last few months, and if you strip out healthcare, and I think there's an important reason why we strip out healthcare.
All right.
Right, that's more secular. So if you strip out healthcare,
Mara continuation.
jobs at about last month we grew 10,000 jobs. 10,000 jobs last month, ex healthcare, of course, adjusting for the strikes. Over the last few months, we're only gaining around 50,000 jobs right now. What's interesting about that is you think about the standard error on that report. The standard error is like,
Look at frickin' Mara. This thing is just going and going and going.
and I think for all those people that are looking for March cuts, which I think is very early, I think that's what it would take. And I think you need a negative or something really close to that for the Fed to start cutting in March, which again I think is wildly premature. We do expect 3 cuts as you teased at the start, but we don't expect that to start until Q2.
Steve, how many cuts are most people expecting?
Depends on what you mean by most people. If you look at most Fed officials, the average is 3. Significantly, not a single Fed official forecasts a rate hike next year. And I have parsed it out. You've got a bunch that are at 3 or less, and a bunch who are at 3 or more. And it is interesting today, John, that the annualized core PCE number came in below the average Fed forecast for the end of 2024. So when you ask about most people, maybe you want to talk about where the market is. The market's at like 6.5, right, or nearly 7. And so that's a big number that's out there. But if that number does come in or continues to come in below
the Fed is forecasting that they might do more. And my interest right now, I have got a thing I'm thinking about, John, which is when do you get beyond the Arthur Burns horizon? Which is, when is that point when you can feel comfortable? You've lowered rates and you won't have that reacceleration of inflation that you had in the 70s, to which Arthur Burns is most notoriously known.
You know, I would just add one thing, because Steve showed a lot of numbers there, and I think some of them are, I think, really sort of worth just drilling into a tiny bit. Think about, so I like to look at the 3-month percent change annualized. I think that's always the right way of looking at inflation, because it gives you a better sense for sort of near-term trend. But if you look at the 6-month percent change, the 6-month percent change is now 1.9%. So you're roughly, at the target in that context. Again, look, you can slice this thing up however you want. But here's the interesting thing. That 1.9% on the 6-month percent change, it doesn't even include all of the slowing that we know is in tow from rental. And so that's what waits for us. I mean, you're going to see these measures of inflation, I think, actually slow more meaningfully than
So, Tom,
probably appreciated at the moment. Yes, Steve, sorry.
Tom, I don't know if we have to go right now, but the thing is that if you think that's the case, and by the way, there are some Fed officials who think that's the case also, you would tend to be in favor in that context.
Earlier hikes? You mean earlier cuts?
Earlier cuts.
We got to transition away from the hike thing at this point. Yeah. So look, we think it'll happen in Q2.
Marathon Digital continues higher. Apple starting to bounce on the 60-minute at the low.
But if we're right, that labor backdrop just continues to grind slower, and you get to this sort of very close to 2% year on year by roughly the middle of the year, which I think is very plausible. I think that's it. That's the magic. I think that's when the Fed starts cutting rates. So Q2 for us remains, I think, a really good call. Steve, this is a been really call for a while, by the way. Just FYI. Okay. Yeah. Okay. Steve, this is a weird environment, and we hear all these stats on, hey, when the Fed goes from hikes to cuts, here's what the market tends to do. Is any of that valid, you think?
Coca-Cola bouncing over the last 2 trading days. That's been off lately. Coca-Cola.
It's a good question, John, and I guess my New Year's resolution is to stop.
Wow, Marathon Digital just keeps going. Meta, Moderna. Why am I listening to CNBC? Why am I listening to CNBC? Uber having a good year. Uber. U-B-E-R. Uber. Flagging at the high on the weeklies as well. Flagging for the last week and a half. Uber looking okay. Looking for a follow through after this consolidation. Microsoft getting a bid now. Watch Microsoft here, starting to catch a bid. Okay, we've been looking for this to push to 376, then 377, 378 or so. So I got about a 2-point resistance window right here. Okay, Microsoft looking good. All right, here's A, here's B, C, a higher low, looking for C and D. Volume starting to pick up on Microsoft.
Very low at this point. Not a lot of anticipation here as it kind of consolidates at or near this $61 to $63 level. So I look at a strategy that takes advantage.
All right, can we get going here, Microsoft? Thank you. ARM Holdings trying to break higher as well. ARM Holdings. Let's see what that looks like. ARM. All right, trying to break out. ARM trying to break out. Trying to break arms.
We got you covered the biggest stocks, the biggest trends, all the market moves. The watch list with me, co-head of Levy, 2 p.m.
Spy.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Tesla. Come on, Tesla, break above 260. 255 is support. 255 is support. Tesla with the call wall. We're right above the call wall, 255 for Tesla. So that gives us 260 as a potential target. 255 is support right now on Tesla. Tesla. Okay, folks, we've got a little bit more than 2 hours to go. 2 hours and 45 minutes. It is 1:15 on the East Coast, 1:15 on the East Coast, the best coast with the most. Hope everyone's having a good day. And of course, I'm kidding with you guys out on the West Coast. I love the West Coast, especially La Jolla. That's like one of my favorite areas. La Jolla, Torrey Pines, Sausalito near San Francisco. That's a nice area, Sausalito. Okay, VIX with the European Bourses closing. VIX did drop a bit at the lows of the day, 1329. A little bounce. Marathon Digital continues to ramp higher. Marathon, crazy strength. Bitcoin, what are you doing, Bitcoin? NVIDIA turning back towards VWAP. Bitcoin turning back up. Bitcoin needs to get above 35,000 now. XBI biotechs have been in play today. Moderna doing very well. Moderna, Tesla, Meta turning back towards VWAP. Oh, Kathy Wood. Is she on there now? Oh, no, that was earlier, right? 150. Oh, she's on there now? She was buying Tesla.
Away from when it initially fell. So why buy it here if he's still doing the same things that you sold it for?
Well, he's de-emphasizing metaverse in favor of much more focus on AI. I think ChatGPT, GPT-3, 4 have lit a fire under a lot of companies, and a lot of companies have had
Meta pushing higher.
Okay, this is where innovation is really going to take off, and take off a lot faster than we expected. Whereas metaverse is making its way along. So we just think they're in a really good position with all of their platforms and all of the information. Proprietary information is so important when it comes to AI and large language models.
What, if anything, do you do in AI-driven hardware? You famously didn't make a big bet on NVIDIA. I guess most people wish they did if they didn't. But from here, there are a number of other chip company names that have potential in AI. There are higher-end hardware players like Supermicro that have perhaps more potential in AI. Are you interested in hardware, or are you focused on software as the AI play?
Well, first of all, I'd like to correct the record. We initiated our positions in NVIDIA when we started the company 10 years ago, when it was roughly $5 on this stock. We still own it in our more specialized strategies.
But as we were concentrating towards our highest conviction names, NVIDIA's rate of return expectation, 5-year compound annual rate of return expectation, dropped below 15%. At the same time, some of our software companies like UiPath, Twilio, their compound annual rate of return expectation, based on our research, was much, much higher and rising because those stocks were falling. For every dollar of hardware we've spent, AI hardware, we believe it will pull through 10 to 20 times as much software. And so, yes, we did go more towards software. We went to companies that we knew had they met 4 criteria for us. One, they had deep domain expertise. And in the multi-omic space, life sciences, ever more important these days. They have AI expertise. They're taking this movement, this breakthrough seriously. 3, they have good distribution, preferably global, perhaps with partners. And then beyond that, proprietary information. We look at every stock in our portfolio through this AI lens. And the proprietary data assets in our portfolio, we think, are superior to those of most other portfolios that are not as focused holistically on AI as we are.
Okay. I got to shift the conversation to ask you about the Spaces chat with Elon Musk. Of course, your Tesla call years and years back really put you on the map. Really, people were like, Tesla's going to do what? Come on. And it's done what you said. Musk, not too thrilled with the idea of passive investing. Unpack what you took from that, because for most investors, passive investing, at least for a large part, if not most of your portfolio, was just smart.
Yes, well, he did give John Bogle a compliment, basically saying, from an investment point of view, bringing down the costs with these indexes was a sensible idea. It had just gone too far, and we couldn't agree more. The pendulum, after the tech and telecom bust, and even more so after 08-09, what we saw happening in the market was a shift towards extreme benchmark sensitivity, so much so that during 21 and 22, what were most portfolio managers and analysts doing? They were selling our stocks that are not in benchmarks for the most part, and they were buying the benchmark stocks. So the pendulum shift has gone so far, and at a time now when we've got 5 major innovation platforms evolving at the same time and converging, creating super exponential growth expectations. But the market's doesn't understand this. It's not doing the kind of research that we are, first principles based on these new technologies. The research centers more around these indexes.
I think Kathy's an AI.
Analysis. I think that's what
She looks like an AI.
To look to the future if you really want to invest the right way.
I can understand saying don't be on autopilot. I think sometimes retail investors make wise decisions by deciding to go, as you mentioned Bogle, deciding to go with more passive strategies, more affordable strategies. I want to ask you also about Bitcoin and crypto. Quite a rocky couple of years. It's been on the upswing, along with a lot of the riskier trades into the end of 2023. What do you do with it in 24?
Well, it was very interesting. We learned
Marathon Digital just keeps going. Oh my gosh.
in March, during the regional bank crisis, when the KRE, the regional bank index, was imploding and Silicon Valley Bank went under, Bitcoin went up roughly 50% during that crisis. And at that moment, we had proof positive that Bitcoin is not just a risk-on asset, but it is also a risk-off asset, a flight to safety, a flight to quality, as others are saying. That is quite rare. And what was the flight to safety? This decentralized, fully transparent blockchain technology is not subject to counterparty risk the way our banking system is. And I think that was an aha moment for a lot of people. And then, of course, we have the speculation about Bitcoin's ETF.
All right, Marathon Digital continues.
One of the filings, and we're ready whenever the SEC, whenever the SEC gives the go ahead. But we also, and I don't think many people know this about us, but we, with our partners, 21 Shares, which is the largest pure play ETP provider in the world with $2 billion in assets and 40 different funds, we actually launched 5 futures-based strategies, which the SEC has allowed. And so we've got the pipes working, and from an infrastructure point of view, we are ready.
Kathy, finally, we put aside the trades that you're known for, maybe some of those highest conviction names. What is your highest conviction investment call for 2024?
You know, we have a 5-year investment time horizon, but I will tell you, if you look, and we publish these every day, if you look at the top 5 stocks in our portfolio, Coinbase actually took the #1 slot. It's up 400% this year from Tesla, which is up roughly 100%. We still have a very high degree of conviction, but of course we take profits along the way. Recently, we did add back to Tesla. UiPath, Zoom, Roku, Block, Roblox, CRISPR Therapeutics in the multiomic space. The FDA approved the first gene therapy, CRISPR-Cas9 gene editing therapy, to what we believe cure, and it does seem to be curative, sickle cell disease. The next one we think in March will be beta thalassemia. This is life-changing innovation. And so we think that the multiomic space has been hurt the most during the past few years by the cash burn situation. It's a very early technology generally. And we think, therefore, has been the most disadvantaged and probably inefficiently priced of all of our strategies.
Okay, so that means the last one you mentioned is your highest conviction.
Oh, I'm just giving you our top 5.
Okay, that's what I thought. You weren't going to pick a favorite kid for me, even though I tried. Kathy, thanks.
All right, Jonathan.
Coming up from Book Talk, as in TikTok Book Talk. Yes, that is a
Okay.
rapid bookstore expansion. CEO of Barnes & Noble joins us with his read on the consumer this holiday season and what he sees in store for next year. Plus, the Magnificent Seven have dominated the market this year, and one of our guests says they could do it again in 2024. He makes his case, brings his favorite 3 names out of that group. And as we have the break, let's get a quick check.
Marathon Digital continues to move higher. Nice job. It's up 10.5% today. Options are up quite a bit as well.
Is The Exchange on CNBC.
Looking good. Marathon. Nice. All right, so the S&P is just chomping around a flat VWAP. Maybe they run it end of day up to the highs of the day. Maybe we test resistance. S&P 500, of course, resistance is overhead at 47.75. And support is right below. Moderna continues to look very strong. Moderna on the daily. This is the 5-minute chart. Moderna looking very strong, breaking above resistance levels. Looks like we're just going to keep going. Okay, Moderna, can I get to 105? I am short a call at 105. I'm long the 90 call. So I have a vertical on Moderna, looking for this to continue. That position is currently up 35%.
To Gen Z and Book Talk. With book sales still holding strong, Barnes & Noble has opened 30 stores this year with plans to open at least 50 more next year. James Daunt, the CEO of Barnes & Noble, was part of the hedge fund that turned around the UK's largest bookstore, bought out Barnes & Noble 2 years ago. Joins us down on the exchange. James, what happened? Why are bookstores back?
People are reading more, which is very good news if you're a bookseller. And I think we've hopefully have become rather better at curating our bookstores. They're friendly, nice, and very busy places. So,
But it can't be just that, James, because people have Kindles and other e-readers that many thought they were going to be reading on, but it's paper books in physical stores. Why?
Why? Because a real book is still a durable product. They're fun things, and if you want to choose one and you're not quite sure what to read, a bookstore is a fabulous place in which to find them. And as we've concentrated on books, because we sell an awful lot of other things, but as we've reconcentrated on books, we've done much better.
It seems like the shift from products to services in the economy that we saw post-pandemic actually benefited bookstores, though people might think of books as products and not services, because the bookstore has become more of an experience, no?
It's become more of an experience, and I think across all age groups, but particularly for us amongst young adults. We find our stores absolutely full of young people, really from teenagers up to young adults, enjoying, I think, also the companionship that you find within a bookstore. So it's the physical space, but it also is being part of a community and the enjoyment of that experience.
So when I was in high school, I was a little bit of a nerd, a little bit. We used to have book day on Saturdays and go to Barnes & Noble or Borders. My friends and I, we would just like look at books and hang out and talk. I know, sounds good, but it sounds like you're saying that's what young people in this age of smartphones and TikTok are actually doing physically in person.
It is definitely what they're doing physically in person, but we don't just see it around books as well. I mean, vinyl has come roaring back. Our music sell even, dare I, and incredibly, dare I say, we're selling more CDs these days. So there is a return to the real physical product, and I think, especially amongst younger people. I'm obviously of a vintage that is way past that, but our customer base is really invested in the experience of the physical product.
Well, a bald head doesn't tell you everything about somebody's age. Let me say, though, I wonder what you do with the data on the back end, even as people are having this in-person, in-store physical experience. How do you harness that to make sure that the physical bookstore doesn't get Amazon to get?
Well, one of the things we've done is completely decentralized. So we leave each store to curate itself through the book-selling team that's within it entirely as they wish. We no longer have central direction. And I think that's kept all of our stores with a distinctive personality which reflects the individual communities in which they reside.
So far, we're hanging out right underneath resistance. Okay, S&P 500, 47.75. It'd be nice to see them test that for a nice Christmas present. I mean, we've already got a very nice run up from October. If you've been taking profits along the way, I don't want to say painful, but it's To see prices still going higher after you've sold. I mean, I did that with Coinbase. I'm not kicking myself for it, but Coinbase continues to rally. It sold it near the 120s, I believe, when Jason was selling it as well, over at Three Peaks. So it's up another 40 points. Jeez, that's crazy. Coinbase 177. Okay, not bad. CarMax not doing anything. CarMax. All right, big move yesterday. It dropped a little bit and a better entry near that 77 breakout zone. So hopefully this bases and turns up. Resistance over here on the left, volume by price. All right, so keep an eye on the S&P. S&P continues. Nice. So, Ken, you've got a core position at $4.85 on Mara. Very nice. Very nice. What's going on with audio?
Welcome back to the exchange. I'm Pippa Stevens, and here's your news update this hour. In the wake of the United Nations Security Council vote approving aid to Gaza today, Israel's ambassador to the UN is criticizing the move, saying the world's body's focus only on aid is, quote, disconnected from reality because Israel is already allowing aid to be delivered at scale. He says the UN should be focused on the humanitarian crisis of the hostages. Workers at a Wells Fargo branch in Albuquerque just became the first employees of a U.S. mega bank to unionize. The milestone comes as Wells Fargo is facing a wider labor campaign. An Alaska branch called off a vote to unionize this week. Branches in both Florida and California have also filed petitions for union representation. And the Disney World is rolling out what could be the most expensive award show gift bag ever. Curated by the lifestyle magazine The Rob Report, it's estimated to be worth $500,000 and includes luxury stays at five-star hotels around the world, a $2,000 bottle of tequila, and a $250 cream from Brad Pitt's luxury skincare line. John, I would love to get my hands on one of these bags.
And that's why you're not getting one. Steven, thanks. Coming up, it looks like maybe Wall Street wasn't too naughty this year. Santa Claus has arrived. All three major averages on pace for yet another weekly gain. What is it, cookies and milk from here for stocks or coal in the stocking? That's next. We'll change it right back.
Okay. Looking good. All right, let's take a look at the FANG stocks. I just, I'm hoping for the best, but coming into this week, we felt after VIX expiration that we would see Thursday and Friday volume taper off. The volume is like non-existent right now compared to like yesterday into the close. We had that nice ramp, and the previous day, same kind of close at the highs of the day. Yesterday we closed higher, right around what 473 or so. So yeah, it's doing exactly what we anticipated it would do going into the holiday. VIX is just dancing around at 13 and change, not doing much off the highs of the day. Let's just go check the dollar. The dollar, oops, DXY. The dollar is at 101. Wow, 101. I haven't looked at the dollar in a couple of days. The 10-year yield, US 10-year, that bounced earlier. It's now starting to trail off at 3.9%. VIX, of course, trailing off. Yeah, good job there, Ken. VIX, I'm happy for all of you. Definitely happy. Okay. Considering what, 80% of traders fail? Whatever the number is. All right, so yeah, everything is just sitting here. Amazon trying to go green on the day. Microsoft at the highs, 375, running into resistance. I got to believe that there's a call wall right there. Let's see, Microsoft 375. Yeah, so we ran right into the call wall. Microsoft, no surprise that we bounced off of that level. Okay, so here's Microsoft. Microsoft right at the 375 area. Okay, there's 375 right overhead. Three, 7, 5. 375 call wall. Okay, it's 375 call wall. You're right at it right now. So no surprise that we're running into this level. If you pay attention to Money Magic's levels, you know that 375 is the call wall for Microsoft and right where you would expect price action to get rejected. That first call wall is 375. The next one's at 380. So we'd need to get above 375. Okay. So that looks pretty good. So no surprise, Microsoft is stalling right here at 375. Okay, we're getting close to 2 o'clock. Mm.
You just have your top picks on the screen. I got to ask you about the one that's not like the others. TJX, TJ Maxx, and Home Goods Parent, not like Microsoft and Nvidia. Why do you like it?
Well, I mean, look, some of the retailers have done very, very well. Recently, Costco, Lululemon. TJX has been a great long-term performer, phenomenal stock. Has lagged because they love to bring down expectations and earnings in the stock. Has lagged the other big retail winners, and I think that presents an opportunity because historically they do like to temper rise and beat. So that again offers an opportunity and a big long-term winner.
Okay, can we get about 375?
Coming up, Lilly and Novo are monster runs this year as weight loss drugs take off, but they're not the only diabetes-related names seeing big gains. One top panelist bets there's more room to run in the space in 2024. That's what's going ahead. Here's Jen Control.
All right, Microsoft just sitting here at 375. The call wall right there, 375. Running into resistance. The reason why you're running into resistance is because people will sell options as they're approaching in the money or above or in the money. Okay, as we ease up towards 375, you'll have some sellers, some supply. If we get above 375, maybe some of those take profits and roll out to 380. Either way, looking for price to stay above. Note the Tesla second from the right, 255, 260. Tesla is sitting right on top of 255 right now. No surprise, as price action tends to be a magnet at that level and resistance if below it. So, all right, Microsoft looking good. Yep. Okay, what are we doing? Okay, maybe we get a run in today. That'd be kind of cool. I'd like to see us run higher in the day. Okay, this is being Microsoft. Okay, Microsoft looks good. One more time, take a snapshot of the screen or check out Money Magic's levels in the Money Magic channel. Okay. Okay, Microsoft right up against that call wall and squeezing. Right now, the stock is squeezing. Microsoft is squeezing right up against that level. Okay, here's Microsoft squeezing against that level. You can see how tight the Bollinger Bands are. Watch RSI. If RSI turns up, look for a follow through.
Another name she likes is software maker UI apps. Finally, CRISPR Therapeutics, after the FDA approved its gene editing therapy for sickle cell disease, Wood calls the news life-changing innovation. She expects more good things for the company. Well, coming up, Jefferies analyst Matt Taylor made the bullish case for Insulet ticker PODD here on the exchange in early October. Shares are up more than 35% since that upgrade, but a different diabetes management company, that's one of his top ideas for 2024. So join us to review that name. Next.
Okay, we're starting to get a little bid, maybe some short covering again on the FANG stocks. Okay, Microsoft. We'll come back to you in a few. Let's see, Amazon. What are you doing, Amazon? Amazon pushing above VWAP, looking for a follow through. Amazon. Okay, Amazon pushing up against the upper Bollinger Band. Amazon. Looks like it might go here. Watch RSI. RSI pointing to the upside. So we're above the upper half of the Bollinger Band's range. Okay, that's a 2-minute chart. So just zoom out, look at the 15, 30, 60. See how they look as well. Amazon daily. Okay, trending. So the 921.50 say looking for longs on dips only. So we want to buy dips. This is a long setup. Higher highs, higher lows. You can also sell credit spreads. I have no credit spreads on Amazon. I have no position in Amazon right now. Probably not going to take anything new into the evening session and this last couple of hours of the trading day, given we're off on Monday. So that's good for credit spreads. So we're off on Monday, another day of theta. Open, what are you looking at there? Open, OPEN. Open looks good. Open, 921.50, 200 day.
Welcome back to the exchange. My next guest upgraded Insulet to buy in early October. Told us here on the exchange that concerns of weight loss drugs that impact the need for insulin were overblown. He nailed that call. The stock has surged more than 30% since then. He's taking notice. We're reporting shares upgrading it this month. And he's staying in the predicting and tandem diabetes care. One of his top ideas for 2020.
All right, yeah, so open, you got 540 is the July pivot high resistance. Looks like you're headed there. 921.50, 200 day, all pointing up and to the right. So that's a bullish trade setup. Buy the dips. Don't buy at the high of the day. I like buying on a dip like right here. Wednesday, Thursday, it was right at the 9 EMA. It followed through and breaking higher today. So that momentum should carry forward. It only moves 35 cents a day.
I wanted to put this call on because since around November 10th, it looks like Tandem has recovered to its current level. Is it how far can
Yeah, CONL. Yeah, it happens. You know, and it depends on your risk level. Your risk level. You're managing other people's money, aren't you, Frano? So
So what are your most important couple of theses, narrative for 2024 then? Because I mean, these stocks are they're knocking on the doors on the price targets where you are. So I wonder, how are you making your decisions, your filters for what to buy next?
Well, Tandem's not, right? So that's why we're pushing folks into Tandem. We still have significant upside there.
Right.
I think the main thesis points to think about with any of the diabetes, including Tandem, would be, look, this is a good growing market. There's a lot of unmet needs.
yeah, just trade your plan. You have more success than failures. I have, occasionally I'll have something that doesn't work. Like what was it? Something I took off earlier. What did I take? I took a small loss in what was it earlier? Dexcom. I took a small loss in Dexcom because it's not following through. I mean, not everything's going to work. So the way I look at it is this. All right. So I took Dexcom. What was it on? I want to say Tuesday. Looking for it to break higher. It dropped off on Wednesday. I stuck with it. It bounced yesterday, but now it's not going anywhere. So I could stick with it. I had January. No, I had 1229. So next week's calls. So Theta's going to kill me over the weekend. So rather than sit in a position that's not moving, I took it off. All right. So took it off for a 25-cent loss. No big deal. Actually, it was a 35-cent loss. But for every one of these that don't work, we've got 6 or 8 that do work. So when I enter a position, if it doesn't work in the next couple of days, I'm out. I'm done. I'm not going to sit and wait for something to work. Usually, if you take a position, you want that to work immediately, right? And last couple of days, the markets have rallied, and this didn't do much. So everybody's criteria is different. For me, 2, 3 days go by, it doesn't make any progress, doesn't do what I thought it was going to do, then I'm out. I'll move on to the next trade. That's why I like credit spreads so much. Over the years, I found that credit spreads, reward you more often than not. Like 8 out of 10 times, you'll get a nice reward for just being patient and letting theta kick in, and time decay and impatience pay you. You get the credit up front. And if the stock does what you think it's going to do or just sits there and does nothing, you make money. And that generally, if you're trading 17 delta, you're selling a 17 delta, and you're buying like a 7 or a 10 delta for protection, most of the time it's going to work in your favor. Like one out of 10 times, you might have to aggressively manage. 1 out of 10 times, you might have to keep an eye on it. But 8 out of 10 times, most stocks will continue to do what you think they're going to do. If you got a nice implied volatility of, say, 36 to 50%, and you're trading those 15 right now. Let's see. Let's look at NVIDIA, for example. NVIDIA. Let me just look at NVIDIA. I have the 460, 450, 460, 450 vertical. I'm going to show you something here. And that is for what? January 5th. All right. So I've had this since yesterday. I got shaken out. I had this same position coming into the week, but I got shaken out yesterday. No, on Wednesday when this one pulled back. So I bought it back yesterday. So let me show you what I'm looking at here. So I had a week into the trade. And the good thing is that on the dip, this actually gave me a better re-entry because the puts had gained in value quite a bit, and then the market's moved away from it. Let's see, 460, 450. Okay, 460. Sell the 460, not buy. Okay, so we're hearing a little bit of bearish flow coming in. Okay, so let me go. Okay, NVIDIA.
Welcome to Power Lunch. I'm Dominic Chu. Stocks are holding on to gains right now for both the day and for the week. This should be the 8th straight uptrend for the major averages. As you can see there, we're kind of flirting around with some moves, fractionally higher. This is a streak which dates back to the end of October. The average is up at least 15% over the course of that span. The Dow overcoming a huge drop in shares of Nike today. The company cutting its sales forecast, noting cautious consumer spending among other things. Also outlining cost-cutting measures to the tune of $2 billion over the next few years. Nike's troubles are having an impact on its customers.
Mondo, we need to start you a GoFundMe page, man. Your life sucks, man. I know. I feel for you, brother. Okay.
Now we start with the market rally today. Stocks are higher and on pace for back-to-back monthly gains with the S&P on track for the best quarter since the fourth quarter of 2020. But can the good times keep rolling into 2024? Ryan Sana is a CNBC senior analyst and commentator. He's also the chief market strategist at Dynasty Financial Partners. And Mike Bailey is director of research at FBP Capital Partners. Thank you both for being here with us. Ron, let's start with the bigger picture right now.
Okay, so I was going to talk about NVIDIA. All right, so got shaken out of NVIDIA on Wednesday. It happens. It happens. But if the trade is still set up, then I'm going to get back into it. Of course, I'll get back into it. Okay, so here is you can see NVIDIA. All right, NVIDIA. Let's see NVIDIA. Whoops. NVIDIA. Okay, here's NVIDIA. Okay, so NVIDIA is not going anywhere. But with this credit spread, I don't want it to go anywhere or move slightly higher. Okay. So this has changed quite a bit from when I took it, but I'm looking at theta. It's $21 a day on theta decay. So that'll work over the weekend. It's a 14 delta. Now I could have done like 5 wide instead of 10. I'm not sure why I did that because that makes my max loss $900. So about 10% on my money. But look at the bottom of the screen. You can see where price was when I took that picture. It's pretty much the same place, 489.88. So long as it stays there or moves to the right, maybe moves a little bit to the left, but doesn't get past that diagonal line on the left and stays above that vertical, then I'm okay. I keep my credit, $100 per contract. Actually, it was 150 yesterday, 150 per contract. Okay, just looking for NVIDIA to continue higher. Do you think NVIDIA is going to drop down to 460? I don't. That's about a 14% chance it's going to drop down. And that's based on options. Okay. Options and expectations currently have a 14% probability or chance that price action by January 5th could get back down to 460. But before it got there, I'd start taking profits off if this started moving to the left. Okay, so I get a credit up front. Yesterday, I got a credit up front, $1.50 or $150 per contract per day. I mean, $150 per contract. So I get the money up front. I got 4 of those. And as long as I stick with it, everything should be fine. As long as price stays right here, I don't mind. I still got the credit up front. And theta kicks in at $22 a day. Okay, S&P is starting to pull back now. Okay, back to S&P. There's lots of ways to do credit spreads. Some of you like to do 1 or 2 strikes below the money. Sometimes I do 5. Sometimes I do 10. All depends. Okay, so let's look at NVIDIA. Okay, S&P is starting to fall off now. All right, S&P starting to fall off a bit. Okay, they're going to fill the gap now. 4750 is support. We did this on what? We did this on Wednesday. We closed at the low of the day, right? Was it Wednesday? And then we opened up higher. Yeah, we closed at the low of the day on Wednesday. We opened up higher yesterday, faded, retested the low, and turned back up towards the end of the day. So that turned out to be a pretty decent day for trading, day trading, SPY. Still don't have a whole lot of block volume, so it doesn't look like institutions are doing a whole lot here. Okay, futures dropped off there. Microsoft's stuck to that 375 zone, just 40 cents off of it right now. Microsoft. All right, was that the shakeout to see if anything comes loose on the SPY? Okay, feels like we could slide a little bit more. Watch the stochastic RSI in the lower panel and support right below it, 4750.
Fourth year of a presidential cycle is also the second best year of this period. So kind of got to play the odds there.
All right. Gentlemen, Ron and Sana, Mike Bailey, thank you both very much. I wish you both a happy holidays.
Arm holdings trying to push higher.
Moving in the negative territory, the other two are not on their best levels. The yield curve is mixed with short maturities yields a little bit lower and long maturity yields a little bit higher. That mixed package is telling you the truth. People can annualize these short-term 3-month and 6-month on the monthly yields or the monthly rates on some of these inflation numbers, but nobody knows whether inflation is going to be linear down. And 3.2% on core PCE year over year, I'm sorry, it still has a 3 handle. The Fed's objective is 2. So what we can Rorschach this any way you want. The markets have an opinion, and the opinion is mixed. If you look at a 2-day of 2s, something should jump out at you. We're inside yesterday's session, okay? But if you look at 2-year on the week, 2-year on the week is down about 13 basis points as we trade. But look at 10s. 10s have a higher high than yesterday, so it's not an inside day. And if you look at the week, you can clearly see that on the week right now, 10-year yields are down only 2 basis points. So we want to pay attention to the long end. The long end's going to get a whole lot stickier. The short end, of course, is moving with the Fed, which already had a rather big move. We don't talk about the dollar index enough. Right now, if you look at a year-to-date chart, we're down 2% on the year, and we're closer to the lows than anything else. And maybe what's most important is, once again, that chart looks a lot like the interest rate charts as we're on pace of the dollar index for the lowest growth in 5 years. Back to you.
All right, Rick Santelli out in Chicago, the latest on the bond market action right now. Happy holidays, sir. Switching gears now to Nike. That's on track to have its worst day in 26 years. 26 years. Its shares are plunging right now 11% plus in the session. The worst performer in both the Dow Industrials and the S&P 500 on disappointing second quarter earnings and lower fiscal full year guidance. It's dragging down other athletic-focused stocks in sympathy. But our next guest remains bullish, saying that Nike's size and its scale gives it a competitive edge over its peers in the long run and expects investors to buy it on weakness. So joining me now for more on that story is Simeon Siegel, senior retail and e-commerce analyst at BMO Capital Markets. Simeon, this is a big deal. I mean, this is a Dow component. It's Nike. It's one of the biggest brand names in the world, and it's just shed over 10% of its value in one day. Why should investors buy the dip?
Good to see, Don. That sounds very, very Frenchish. So, listen, I think everything you just said is fact. But what's interesting is if you draw that stock chart out a month, you'll see we're flat. And so I think we should not ignore the fact that right now what Nike has done, and to be fair, the market and Nike Group in general is up a lot. But to think that we're down the most in 26 years, but we're also flat to 3 weeks ago, I think is an important point of context. And so what I thought was really interesting last night, listen, I get the stock being down today, that we should not ignore that. But what I thought was interesting, I think there's 3 distinctions we have to make. I think we have to make a distinction between what they actually did last quarter versus what they guided to. Last quarter the quarter they reported was great. What they guided is what's taking the fear, what's taking the shares down. I think the second thing we have to do is revenues versus profits, and this is a big conversation because Nike historically has been let's grow.
Wow, Nike got down to 90. Remember when it got back to 90? Back in September?
That is a big number, especially for a company with Nike's size. They're making more money. So I think that's number 2. And then number 3 goes back to kind of all the points before this, the segment right before. It's the change in multiple versus the change in numbers here, I think, is worth putting into context. And so asking our question, saying the stock has run a lot. It's now giving you a little bit of a breather room because they're telling you things are going to be more concerning go forward, which is Nike's par for the course. And now we have to just recalibrate and say, okay, where do we go from here? I think from here we go on.
Speaking of recalibrate, that's what Nike is doing, or that's what it says it's going to do in the coming years with its cost structure. They've announced restructurings that are trying to save about $2 billion worth of costs over the next few years. Take us through what exactly that plays out like in your models, and why would Nike take
VIX a little spike there.
in the longer term they still feel as though that growth picture is intact, or is there now a recalibration of what the street should expect for Nike's growth prospects, given they are not?
Remember Wednesday we had a sell-off into the close caused by zero-day options.
The answer to that's probably yes on all fronts. It's not normal that you hear of a $2 billion cost cut that in the same sentence they say, well, we're looking to reinvest those savings into fuel growth. So normally this is a very different restructuring. Normally restructurings are, we have a problem, we need to fix it, let's do that, and then we'll go from there. This one sounded like, to your point, we need to just move things around so that we can take those dollars and allocate them to growth. But I think your question makes a lot of sense, whether that's the right thing, whenever you do a restructuring. Unfortunately, this is obviously going to involve people. And so when you're restructuring people, when you're restructuring lives, does it make sense to immediately flip those dollars around and grow? Or should you analyze why we are where we got here? You and I have had this conversation around this D2C. I mean, my team published a report, D2C is not all it's cracked up to be, and we believe that. I think we're seeing it. I think the same way that I just said, there's a distinction between revenue and profit, and now finally Nike, we're seeing maybe the revenue falter a little bit and the profits are exploding in a good way. That wasn't the case last year. Last year when we saw that.
All right, so for Wednesday we had that zero-day options trade that took everything lower. Currently we're at the lows right now of the evening session.
Let's look ahead to 2024. There are perhaps fundamental catalysts on the horizon in the coming year for it. Some folks have talked about the emphasis on pro sports. Some people have said it's an Olympic year that could drive some interest and some marketing surge on that. What exactly do you think is the positive catalyst to watch in 2024?
Nike.
Yeah, so when it comes to the top line focus, listen, the beauty of Nike is there's
There's no hurry here. It needs the base. Wow, Nike just looks awful. And continues to sell into the close. We got an hour and 44 minutes to go.
Convincing someone, persuading someone to buy your product is very hard, and they're very, very good at it. Being able to look inward and say, okay, every dollar that I'm going to drive, I'm going to make sure that I make money, more money on that. That is a very under your control lever that you can believe in and you can take to the bank in a much more seamless way.
All right, Simeon Siegel, BMO Capital Markets with the take on Nike. Thank you very much. Happy holidays, sir.
You as well. Good to see you.
All right, good to see you. Coming up on the show, the trickle-down effect from the attacks on ships in the Red Sea. The bottom line, it's going to cost you more money eventually. Plus, major technology firms are making big cutbacks to their spending on diversity, equity, and inclusion initiatives. And which holiday movie is one on your must-watch list?
Low tick alert minus 800.
All right, we continue to drift lower. All right, Mara, I did reduce my exposure.
Extreme low tick alert.
Okay, we continue to move lower. What's going on with Woody? No audio. Okay, S&P. S&P 500. Spiders continues to show weakness at the moment. On a sell signal since 1:50 p.m. Okay, we're filling the gap over here on the left.
Could be just where do you start looking for potential resistance if you're bullish, and this is where standard deviation channels can help us. We take our blue line, our linear regression line, our line of best fit based on closing prices, and we extrapolate it. 1, 2, 3 standard deviations. That gives us our red line at the top of the screen near 187. That is potential resistance based on our own price history, and certainly not a guarantee. We're not trying to say that. We're just saying that's one potential place to look for resistance in a name that's having such an explosive upside move. To the downside, plus 2 channel, our orange line comes in near 161. Below that, we had a point where price topped out a couple times and then bottomed out near 154. Another potential area to watch.
Rick, I like that chart here. Before the break, raised the concerns in terms of sustainability. You see a breakneck pace type move like that. I also talked about potential for buy, rumor, sell, fact type activity coming to play. You mentioned, what was it, 187 to the upside, 161 to the downside. That gives us a couple key levels to watch here. Should we pull back here or continue to move higher?
Yeah, and the nice thing about standard deviation channels is that it can tell you a couple things. At a glance, it can tell you the direction of the trend. In this case, it's up. It can also give you these support or resistance levels when there's not much prior price action in the recent history here. So, just a general note too, stocks tend to stay within +2 and -2 standard deviations. So a move above that +2 channel is noteworthy on its own too. So, price action is fairly extreme right now, and not seeing a ton of signs that it's slowing down.
Yeah, a move above that channel really does raise some concerns about sustainability, which is why we decided to take this approach towards trading shares of Coinbase here. It's somewhat of a bearish approach, a little bit of downside bias here. We're taking a look here. Well, first and foremost, because shares are up 400% this year, right, hitting 52-week highs, I thought, again, this is an interesting approach.
All right, we continue to show lower highs, lower lows on the S&P. Volume picking up in the last 15 minutes.
If the market hits turbulence next year, the economy hits turbulence, they can activate their base, if you will, of consumers, which on average, people spend about $200 a year. So they've got a really good base, and the return on invested capital for Ulta is 45%. So the management of the company is done extremely well by just reinvesting their own money.
And you know what's amazing? And by the way, Ulta was a favorite. I mean, that was a name that was just hitting the top over and over and over again. Hasn't necessarily done so this year, so maybe
Low tick alert -800.
it's a little undervalued when you look at it, particularly when you compare it. It shows what's going on in the market for makeup and skincare. Oh my goodness! Remember the IPO? It's up 105%, but they've been doing a lot of innovation. They're working a lot of
All right, we continue to drift a bit lower. Very similar price action to Wednesday's close. With an hour and a half to go, we had this move lower on Wednesday. We popped up yesterday, popped up again this morning. And continue to drift lower. VIX spiking up, 1368.
Well, first, great to see you, Nicole. Thanks for having me. Yes, so the short answer is we will absolutely see a rising tide in tech, bolstered by kind of the twin factors of AI and I think increasing attention paid to security issues. So a little bit of fear, a little bit of opportunity driving everyone. Um, we see this as what our head of AI calls the era of inference everywhere. So if you're an investor, you don't want to have to get down into the tech weeds. At least understand that artificial intelligence includes building the models and then using the models, asking questions of the models. That's the inference part. The reason why that's important, Nicole, is because, companies like NVIDIA are largely on the build the model. And people are
Okay, lows of the session, VIX at the high.
companies like AMD, Intel, Broadcom, and the rest benefit mightily from this inference everywhere dynamic.
So NVIDIA on a pullback, you would say it's still some sort of buy because you think the momentum continues there. What about AMD and some others, such as Broadcom that you mentioned?
Yeah, so again, we don't.
Low tick alert minus 800.
The stocks themselves, we're plugged into the folks. Yeah, absolutely, absolutely. I would say that by the end of 2024, we're going to see some rationality raising its head, and buyers of the Nvidia part of this equation are going to realize that they don't always need Nvidia for all of it, and so that tilts in favor of the AMDs, the Broadcoms, the Dells, the Intels of the world, where that inference is happening. But again, it's positive for everyone.
Okay, we continue to drop off now.
Extreme low tick alert.
Companies using AI, and I don't remember the actual number, percentage number. It was way lower than I anticipated. I mean, when I heard Campbell Soup was talking AI, then I thought we were in a new world, a new era. But I just recently heard a stat, and it was surprising that fewer companies than I anticipated were using AI. That shows there's growth potential, penetration potential, market share to grab. What's missing, and what do you think can come?
Yeah, there's nothing. The thing is, people like you and I, we sort of get this idea of where we are in a trend. It becomes accelerated. This is the beginning of the gold rush, and gold was just discovered essentially in the AI space. And there are going to be people who are finding gold, but there are going to be a lot more people selling pans and shovels, and picks and axes and trucks and all of these other things. And so that's the part of the sector that you really need to pay attention to. The folks that are supporting this effort. Back to the gold rush analogy, it's the wild west when it comes to software infrastructure.
All right, we continue to drop off. The low on Wednesday was down here near 469. Actually, it was 468 and change, 468. Let's see what that looks like on the daily S&P. Let's see what the S&P looks like. Okay, so we got two selling candles at 47.75, pulling back towards the 9 EMA. As long as we stay above 4,700, we're good.
sort of process optimization realm. In my role as a success coach as part of the Wharton CTO program, I get to talk to CIOs and CTOs every week in class, and we go through what their projects are. And I can't emphasize how much these projects just don't sound sexy to the outside observer, but they truly are. Whether you're a shipping company or a pharmaceutical company, you don't have to be involved in technology or selling technology per se to want to optimize operations within a firm. Then there's the whole sector of net new cool AI things that the consumer will be exposed to. But again, that's always going to be the tip of the iceberg. I say AI everywhere.
All right, these 0-day options having quite the impact. Price action pulling back.
It's exciting to be in this space, going back and looking at the history of how general computing servers have developed. AI servers are 10x the cost of a comparable compute server today. And the only reason for that is this sort of fear of missing out at the time to market anxiety associated with gravitating towards only one solution, NVIDIA sort of Ferrari solution. What I'm most excited about in 2024 is the development of standardization and commoditization in this space. And companies that are involved in that area are the block and tackle companies of Dell. Dell came out with a fantastic line of servers recently in the AI space that leverage good old-fashioned CPU technology. Intel, even Apple at the edge in our mobile devices and PCs, we're going to see AI acceleration on the inference side. But specifically the Broadcoms of the world, they kind of own much of the real estate on that computer motherboard. Yes, NVIDIA GPUs are going to continue to get the headlines, but it's all of the things that surround them that I think they'll be playing catch up in the entire market.
Right. All right. Dave Nicholson of the Neutron Group, thank you so much for joining us today and look at Tech Ahead. We appreciate it.
All right, shorts covering. We could still see more downside for sure. So we've had quite quite a move up this week. Let's see. So that's why one of the reasons why I wanted to be taking profits off into strength. Even if we do miss a bit of upside. Okay. I'm okay with missing some upside. I just don't want to see a big move to the downside. I'm not saying that's going to happen. We should stay above 4,700, but we are running into some resistance here at 47.50, 47.75. Okay, up 16% since the October low. More than 16%. And we're currently flat on the day.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Pepperlees, coming live from the New York Stock Exchange. 9 minutes left in the trading day. Monday, we are closed. It's a holiday, so people are getting ready and getting busy here to get to that closing bell. Check it out. We've had some back and forth action. Right now, the market has turned into the red. You see the S&P 500 right now is down about 5 points across the board. We are seeing red across the screen. So people are getting out ahead of that long weekend. Consumer stocks, information, communication, information technology, communication services, real estate are leading the way lower. On the S&P 500, the big laggers would include right now Nike, VFC, Cummins, CarMax, just to name a few, Carnival Cruise Line. Then Liechtenstein is a senior futures contributor.
High took alert plus 800.
Seems a little bit dramatic. I didn't even get to investigate it more, so I would have liked to have done so. Tell me a little bit about your thoughts on this move here as we're going into the closing bell.
Yeah, a dash for the door, right? Nicole, in more ways than one, I guess one could argue, as we are seeing some selling in the indices, all three of the four major indices now in negative territory, as has been a trend. The Russell continues to be and has been the outlier. It's the only one that's actually positive on the day here. But as I take a look at the selling here, it's all relatively contained. I'm not surprised. It's probably somewhat of a thinly traded market combined with, again, that holiday type environment, maybe a little bit of uncertainty as we head into the weekend. Investors looking to flatten up some of the positions that have been established. But I think the long-term bill of holds still feel pretty confident at current levels, considering, well, that high that we see here in the middle of the screen from earlier this week was an all-time high for the S&Ps here, up to 4830.75. Yeah, we're trading about 40 points off that high right now. But
Okay, nice bounce so far. Shorts covering.
anything to be too concerned about here as we head into this holiday session. Taking a look at what we've seen off the October lows from 4122, it speaks to the strength we've seen over the last couple months, and then also kind of helps us put the selling we're seeing today into perspective. Nicole, again, just kind of looks like a thinly traded, range-bound type weakness here. We're still holding up the lows we saw earlier this week on Wednesday. Remember that big sell-off we saw, almost 100 points off those all-time highs I just mentioned, but still holding near these all-time highs, as I mentioned. I mean, you got the Russell at the bottom right corner. We were talking about it being an outlier on the each-day basis today. We only wanted to call it positive, but here you can see it's an outlier on the daily candle chart as well. You got new all-time highs, 3 and 4. Russell's the one that's lagging here, but yeah, I'm not getting too concerned about this here. I mean, the S&P is really down from the point. You know, we were trading right around 4,800 into that number this morning, that close to one PCE data, and it seems to be fairly well digested here. I think this is, again, just a reflection of a holiday market more than anything else.
Right, right. And look, people don't necessarily like to hold stocks through a 3-day weekend, and we saw the big, move up and then pull back. It's already pulling back, so that seems to be we're at 3.9 on right now on the 10-year. So I'm watching that as well. How about gold? That's something that you had your eye on. Not quite at those records, but still at some recent highs. Your thoughts there?
Yeah, absolutely. And in many ways, I think this is one of the products that have benefited in some ways from those concerns, those unease, uncertainties heading into one of these long weekends, right? With geopolitical events, most recently the developments in the Red Sea, that brought up some concerns. And we're watching gold, which is really still just off those recent new all-time highs. We're talking about the indices and the optimism we've been seeing there. Well, the bulls have been rewarded handsomely if you've been trading gold as well, holding on to a longer-term trend up. Now, just to look at the intraday price activity today, we started off with some bid activity up to 2083. We've come back off since, still holding up 2050. That's an area where we've been pretty comfortable in terms of gold. I want to show you what's going on. I mentioned 2050. Here it is right here. We've kind of been shopping around since the beginning of the month. I also mentioned that new all-time high, 2152.30. There it is on this chart. You can see the rally off the October lows, right? It was just stopped.
All right, nice bounce here.
Have exposure into the weekend. Obviously, some of the geopolitical uncertainties. Weak dollar, also rates coming off. I mean, multiple factors to consider when you're looking forward heading into the end of the year at this point.
Okay, nice little bounce on the SPY off the low.
High took alert plus 800.
Well, Meditech, we are an automotive software company that really focuses on solving what we think is one of the most fundamental problems of the automotive industry, which is, safety for all budgets. So we build software that helps the vehicle to understand
Extreme high took alert.
better, so they can make accurate driving decisions with respect to recognizing danger, but also recognizing vulnerable road users. So vehicles today typically have warning systems that fail in most of the basic tests. So our software takes existing sensors, take data from existing sensors like cameras or radars or ultrasonic sensors, and then we recreate the environment using that, leveraging our proprietary artificial intelligence software and our decade of experience building world-class software. That really solves the problem of having visibility towards dangers on the vehicle at any conditions on any roads. So we think that's quite unique.
It's exciting. Where does LiDAR fit in here? Similar, different?
No, not at all. In fact, we don't.
Extreme high took alert.
It doesn't matter for us whether that's camera, radar, or LiDAR. We don't have a preference. Of course, the more sensors you have in the vehicles, the better. But that's the trend of the industry. There will be more cameras, more radars, and eventually LiDARs will make their way once the industry figures out the cost problem. But for us, we're using our software augments existing camera and radar performances. We actually, in certain entry models, more than double the performance in terms of detection distance as well as reliability on existing sensors.
You always tell the kids, safety first, right?
Okay, nice little bounce. Shorts covering. These 0-day options are really messing people up.
Well, very, very challenging, I must admit. We're technology experts. We're not SPAC experts. I think for us, the timing was no timing is perfect, but for considering we have so much market traction, so much demand from the industry, we needed to raise more capital to be able to scale and support many more of the customers that need our software.
This is some kind of bounce.
The timing was now, considering the fact that
Volume coming in on the bounce. Shorts covering.
a solution that really software only addresses that. And we think that the timing is now. Now, of course, this was a difficult process, but we have, a business model that's quite unique. We have investors that believe in it. There's a lot of market demands for what we make. We think it's a great opportunity for anyone who's looking to the automotive ADAS market, and decisions are being made now. So we are in a very, very good position to take advantage of that.
Yeah, understood. I mean, then you see the growth prospects from now to the year 2030.
High took alert plus 800.
Right. For the type of software that we make, really, safety software, ADAS, fusion and perception software, that's a $42 billion market estimated in 2035. So this is a huge market, and there's very little offering. And so most companies today are scrambling to meet regulatory demands with respect to safety. And our software really helps them using existing hardware, existing materials that they have, meet the regulatory demand, but also double the performance and typically reduce the cost by 30, 40, 50% in some cases.
And when you think about so much of the EV world, and a lot of this will rely on this kind of safety, technology, and software. A lot of some of the materials are coming from abroad. How are you finding getting materials and things that you need to make things happen?
Well, again, Nicole, this is one of the major advantages of LetterTech. We are hardware independent. We're agnostic to the hardware. We supply software. The OEMs and the tier one suppliers are responsible for sourcing the material, but these are sensors and processors that are pervasive today. Cameras are in every vehicles pretty much, every new vehicle that gets produced. So is radar, with the exception of maybe one or two manufacturers that go against it. But for us, it doesn't matter whether that's camera only, camera plus radar, or any combination of sensors. Car manufacturers and their suppliers today are looking for software to get us to the next phase of safety. The industry is moving to a more software-defined vehicle where the car comes ready and with the hardware, and software really helps them achieve a level of performance that they've never been able to achieve before. So a case in point, when your vehicle gets out of the production line, it's out of phase with state-of-the-art safety regulations or safety protocols, even in some cases, even safety features. And so our software-only approach allows these OEMs and tier ones to, over the air, efficiently improve the performance, but also continuously be, up to date on the latest safety features.
That's where you come in with all that software. Thank you so much. From Santavami, CEO of LetterTech. Thank you.
Thank you for having me.
Still ahead, we bring in our panel and discuss the health of the consumer. We had a stronger than expected consumer sentiment print. People have been shopping over the holidays. What do we need to know? This is, we're also watching inflation. Here in fact. Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network. No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
All right, so this sell-off, most likely again, we're going to find was caused by zero-day options trading. Look for a move back up into the range. I thought maybe we'd see a similar repeat of what we had on Wednesday, but we're bouncing before the close. Right now it's 250 on the East Coast. I'm your host, Cuzavini, coming to you from theclosingprint.com. It's Friday, the 22nd. It'll be a long weekend. Looking forward to it. I don't usually take many days off, as you know. That extra day on Monday will be well received. Rest and recuperation.
one. And the second part that's interesting is the stock market hit an all-time high this week. And we know studies show from the wealth effect where every dollar the stock market goes up for a consumer, they'll feel like spending another 2.8 cents on the dollar there. So I think this wealth effect is having an impact, making consumers feel confident. And then you have this other phenomenon of alternative means of financing, in some cases with 0% down through, Afterpay and Klarna and Affirm, where we saw Affirm users are up quite a bit, 16.4 million in June of 23 versus 3.6 million just 3 years ago.
Yeah. And Ted, you said not all rosy. What are some of the risks or thoughts that you're also having for 2024?
Yeah, I'm glad that Eddie brought up buy now, pay later. That is something that I'm worried about. The fact that according to Adobe, buy now, pay later usage surged more than 40% year over year on both Black Friday and Cyber Monday. I worry about that from a consumer financing standpoint, especially because we came into the fourth quarter with record high credit card balances and record high rates. And I think some people may be tricking themselves thinking that buy now, pay later is not really dead, or maybe it's just kinder, gentler dead. I mean, you can still overspend. So even though it seems like fourth quarter retail is probably doing better than expected, at what cost? I do worry about the debt burden that people are racking up.
Yeah. And where do you see strength, Eddie, when you're looking at themes? I know you talked about Black Friday and Carnival Cruise Lines, and what kind of companies may fare better than others, watching where the retailers putting their money to work? Eddie?
Well, I think that the same themes kind of continue. It's people are living for today, so the things that make them feel good right now are going to be what they spend on, experiences, things that help them look good as well, aesthetics, as we've talked about in the past. And I think, as Ted has mentioned, there's a real thin window that the consumer's trying to thread here of, can I extend my credit just a little bit longer for these lower rates to actually kick in so that big ticket items actually become less expensive. So
Nice bounce on the S&P. Spiders continue to bounce, shaking people out on that dip. Big volume on the way back.
Yeah. And Ted, when you think about, we're going to have a presidential election, we're likely to have rates coming down, maybe oil will come down. What are the final thoughts here, as far as where consumers may be driven or may move their money?
I think it depends where you are on the spectrum, honestly. We're really seeing that K-shaped economy in full effect, where some people are doing really well. For example, the 53% of credit card holders who can pay in full every month, they're getting rewards and buyer protections and other benefits. And a lot of upper income and upper middle income people are spending a lot on travel and dining and concert tickets and all these things. Inflation, though, has taken a big toll, especially on lower and middle income households. And that's where, even if their wages are up, they feel like their costs may be up even more. The cumulative effect of inflation has been about 20% over the past few years. So we need more months of wage growth outpacing inflation, and we need the job market to remain strong, hopefully.
Yeah. Great to see you both. Thank you. Ted Rawson of BankRates.com and Eddie Yoon of Eddie with Grow and Category Pirate. Thank you. And thank you, friends, for being with me here on the watch list. I'm Nicole Petalides every single day here at the New York Stock Exchange, 11 a.m. and 2 p.m. Glad you were with me. I hope you have a beautiful holiday weekend. A Merry Christmas. Market on close.
All right, this is quite the reversal.
Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So, that's for
Listen, me adjust the bass, add more guitar, maybe some drums.
wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice.
Continue to bounce, continue to bounce. Wow, that's quite the U-turn.
Have a choice in how you invest with Schwab.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network,
Daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Be part of the latest commodities action on Future with Ben Lichtenstein weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I'm Oliver Rennick. Get ready to cut the cord. Market on close is coming up.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim.
Hi, took alert plus 800.
Platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Good afternoon and welcome to Market on Close. And all the way here are ending 2023 for this next week. We got year in review. Thanks for tuning in to our last live show. Markets right now generally in okay shape. Stocks kind of mixed. Still looking for that S&P 500 formal record high that is still elusive despite all of the gains, but sure seems like it's in the cards when the market keeps grinding. Here's the catch though, is that the tech stuff is missing. And we're starting to get this pattern forming a little bit when the Russell sprints out of the gate in the morning. A lot of times it leaves big tech behind. And
So you have a limited upside when we get that kind of rotational activity. Few other things here and there the last couple days on the economic data, those bonds have responded. A couple things I want to point out to you real quick before we get into our program. Firstly, today's strength came from more of a value. Kind of go over
All right, we're starting to see a little resistance right here at VWAP.
first 10 months of the year and the last two. A lot changed in that last two. First 10 months of the year was big tech supported, high quality trades. The Apple, the mega caps, got Microsoft, Nvidia. Not so much for riskier stuff, but as soon as we put cuts on the dot plot for next year, the last 2 months, we've seen that big rotation and the breadth widening. Well, we haven't sold off the high quality tech companies, but leadership has been assumed by businesses that don't make money in the Russell 2000 and more speculative futuristic style tech growth trades. Some might call it value, others would call it risk. Today we see a little bit of a different vibe in the middle of that sort of rotation.
All right, rejection here at VWAP.
Staples are actually one of the best performing sectors, and generally as of late, the discretionary group has been beating the heck out of the staples. We also saw a little bit of a bond fade in the last couple of days. We're having a little bit more trouble holding the bond bid as we've gotten generally solid data. Not great, not amazing, certainly not hot, but very persistent from the jobs market this week. And we also have continued to see general strength in the consumer confidence, sentiment, a little bit of softness in new home sales. The 10-2 spread hasn't really done much over the last couple of weeks, but the fact that going into the end of the year with the yield curve very elevated compared to its depth of 2023 should be encouraging about the economic outlook. Also, the bond market rally just got so hot. Treasuries were steaming hot. And so you see in the last couple of days, a few bond fades shouldn't be a big deal. The dollar as well, which continues to get hammered, is very supportive of risk assets. There's the military data and all the cloud stuff. That's going to be a story for next year. In the meantime, business as usual. And that business has been to just buy any kind of dip. We got one dip on Wednesday, and we bought it out. And we're feeling pretty confident. The dollar down 13 pips is stronger than where it was this morning, but it's still just gotten hammered. And so bears really don't have much here going into closeout there.
All right, we're sitting right underneath VWAP. Look at all that volume. Crazy volume there.
But for now, it's generally still the pattern that we've got in this week, which is gains in the stock market, leadership in the Russell in the short term, and that means where we've got strength in the as well. Kind of the macro conversation, I mean, it's not really much to add this week. And it seems like once we got that big decision from the Fed, it's just been kind of cruise control. Let's start summing up things in smaller sentences, right? So there's strong data, lower inflation, right? The data keeps coming in for the economy, the consumer being strong, but along with that, inflation keeps working lower, and the market was so focused on inflation that they're not as concerned about the short economic data as long as inflation's coming down. And the PCE numbers we got year over year and before all show progress on inflation. But did you notice the price action in notes today? Yields spiked down lower when those numbers come out, and then grinded.
All right, we've got about 54 minutes to go. 54 minutes to go. It's a little after 3 o'clock on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday, the 22nd, going into the Christmas holiday. We'll be off on Monday, be back on Tuesday. Looking forward to the long weekend. Can actually sleep late till about 7 o'clock. Okay, rejected at VWAP. Okay, well, plenty of time to sell off here if they decide to do so. VIX starting to turn up. Pretty decent, pretty decent week. We've been up for all of November, December. So looking pretty good. All right, what's XLE doing? Kind of just sitting here doing nothing. Energy sector, maybe it bounces next week. RSI is above 50, XLE. All right. All right, we continue to test the underside of VWAP.
Treasury supply also being, eased a bit coming into the end of the year here. That certainly help markets, across the board rally. But I don't necessarily think that
Volume tapering off as we slide sideways underneath VWAP.
still story remains about treasury supply, still some questions about inflation for next year, how fast it's going to come down. So we don't think the volatility is necessarily put behind us entirely, but certainly been a positive 2 month run here for bonds, and then I think along with that the equity market as well.
That connection between the everything rally and the Fed's pivot, how clear is it in your mind? Do certain companies need that massive rate reversal next year to survive? Because there's stuff that was flashing bankruptcy signals pretty loudly 6, 7 months ago, and now a lot of their stocks are up 50, 60, 70%. All their spreads and credit are tightening.
Yeah, I think what we're seeing play out here is just the factor of time really starting to work in the Fed's favor. The Fed is now sounding quite confident in terms of where inflation is headed, sounding quite confident with where monetary policy is today, also giving us a lot of positive feedback in terms of rate cuts coming at some point next year. Now that timing is really the biggest open question, and I think for a lot of the companies that you mentioned that perhaps are needing to come to market, needing to roll bonds that are coming off, needing financing, not really wanting to do it at these levels of rates and lock in these high funding costs, with that being problematic. That timing aspect is going to be really interesting to see play out in terms of when will the Fed actually be confident enough that they can start normalizing policies, we're calling it. They're not going to be stimulating the economy with these next rate cuts that start next year, but it'll be more of a normalization of policy. But how quickly that happens, how quickly rates continue to come down, out the curve, that's going to be a really important question for companies as they move into 2024, particularly as you mentioned those ones that are more highly levered and would struggle with higher financing costs as a result.
Okay, so to that point then, when you look at the yield curve in the second half of the year, one of the
All right, so we're just sitting here underneath VWAP with 45 minutes to go, nothing to do. Risk off into the holidays. We're above 4,700, so there's really nothing to worry about. If we were below 4,700, I'd be risk off. At this point, it's just de-risking, if anything. We have a lot of credit spreads. Some of you have a few as well. Credit spreads. The good thing is State is going to kick in over the weekend. The theta on the Tesla credit spread, for example, is $19 a day. So losing value by $19 a day today and Monday. A little bit more selling.
That seems a very plausible outcome to me. And again, it's about, to me, just listening to the Fed over the last 6 weeks, talking about policy being in a good place, rates being sufficiently restrictive, and then what you hear now from the December meeting that the next move is a cut, but really, again, not about stimulating the economy, but just normalizing policy. And so I think that's really going to be the key is, you know, six rate cuts or more, you know, that seems very, very extreme to me in terms of something else would have to be happening that maybe isn't in necessarily the forecast or the consensus right now around.
All right. So we're going into the close. Next 40 minutes. Let's take a look at the consumer staples versus consumer discretionary, giving us a bullish signal. As these lines rise, this looks nothing like the bear market 2022, where these rolled over and institutions began to position more on the bearish side. These continue to move higher. Looks nothing like 2022. We made higher lows and continue to look pretty good. You can see the rate of change is starting to turn up as well, which is also bullish. If anything, we're a bit overbought and could see some consolidation. That's what I'm thinking.
Rocketing 21% higher after winning a $515 million contract from the U.S. government to build and operate 18 space vehicles. Work will start immediately on the projects, and the company aims to conduct launches in 2027. The stock has now more than doubled its year-to-date gains with today's surge, now up 42% this year. And Lionsgate falling 5% after announcing plans to spin off its studio business and its SPAC deal worth $4.6 billion, including debt. The move splits the company's film and television assets from its Starz cable and streaming operations. Lionsgate will receive $350 million in proceeds as a result of the deal. Scott, back to you.
Pippa, thank you. Pippa Stevens, we're just getting started here. Up next, an NFL holiday doubleheader on Saturday. The Bengals battle the Steelers on NBC. The Bills face the Chargers exclusively on Peacock. Broadcasting legend Chris Collinsworth will be in the booth calling the action. He's going to join me next to set the stage. We're live from the New York Stock Exchange, and you're watching Closing Bell on CNBC.
All right.
A recession or something else playing out for the Fed to need to take accommodation off that quickly. But you know, the market does this every time. It does it in every cycle, whether it's a tightening cycle or over-purchasing cycle. They always try to get out ahead of the Fed. They're always trying to price in those hikes or cuts. And extrapolating that out, that once the turn happens, it's going to happen. It's going to happen in a material way. You see this play out through every cycle. So I think that's exactly right. From my I see as an active fixed income manager, this is the kind of market I like. This is the kind of market I think is opportunistic for us. There's ways for us to benefit our clients and our portfolio's performance from exactly these dynamics where we think the market has gotten ahead of where the Fed is likely to go. Now, whether they, cut in June or sometime in the second half of the year, that remains to be seen. But we think there's still a good runway here where the Fed is probably not cutting rates. And so we are definitely fading some of those front-end moves that the market has priced in right now. And in certain spots where it makes sense, we're staying closer to home on the front end of the curve and looking for better.
Look at the New York Stock Exchange. The number of stocks making new highs minus the number of stocks making new lows. Up-down volume is 1.8 on the NYSE, 2-to-1 on the NASDAQ, 2-to-1 up volume on the NASDAQ. Our Apple squeezing, Meta's pushing to the highs, Meta, Microsoft. Advanced decline, you can see we're making new highs. We're making new highs in the advanced decline. New York Stock Exchange advanced declines making new highs as price actions making new highs. That's good. Let's see what bullish percent looks like. Bullish percent. Okay, bullish percent is grinding higher, but it's not at 80%. It's at 65. That looks fine. Let's look at the. Oh, you know what? Let's go to S&P. Let's look at the 75 stocks most commonly held in institutions' core portfolios. That can tell us a lot. XII. Okay, so we're just consolidating up here. We got blue sticks, blue elder sticks. Coming into this, we had green elder sticks, and now we're just moving sideways for the past 3 days in the inside of standard deviation 1 and 2 bands. That looks fine. Okay, this is 75 stocks that are most commonly held in institutions' core portfolios. You know most of these. Okay, so they're not selling. We don't have red sticks. We're not dropping through the 50-day or anything like that. Dropping through the 21-day like we were right here when we bounced to the 21-day. That one red stick right there at the 20-day looks pretty strong. Looks pretty strong, right?
Cincinnati Bengals, my old team. I used to play for them, so I'm kind of cheering for the boys a little bit. But yeah, they really have just been astounding the last couple of weeks with some real surprises, being able to get right back in the race. Right now, they're in the playoffs.
Yeah. Overall, 49ers have sort of set themselves apart in the NFC. It looks that way, at least. The AFC still looks wide open with a number of teams. I'm sure that you would say, well, they could do it. They could do it. This other team down in Baltimore, they could do it. How do you assess where we are now as we head in the final stretch?
Yeah, I agree with you. San Francisco looks like the team to beat in the NFC, and we just saw Baltimore last week. The one team that I always sort of keep my eye on is Miami, because Miami has so much speed on that team, and when that team is right and when they're healthy, sometimes they can just be the most explosive thing that we've seen since the old St. Louis Rams back at the 2000s kind of thing. So it's going to be an exciting playoff this year. I have no idea. I think the 49ers a legitimate favorite. After that, here we go. It's just going to be a great year.
Let me ask you about Pro Football Focus for a moment, but the greater theme of how analytics have really infiltrated all of sports, but they certainly play a role in the NFL. You have to kind of work it into the way you broadcast games too, whereas before maybe a punt would be a punt, now it's a go for it on fourth down. Can you talk about the proliferation of analytics in football?
Yeah, it's really been in the past decade or so. We now sell our data to all 32 NFL teams and over 200 other teams around the country, college football, USFL, Canadian Football League, all the different things. And it's exactly that. It's a lot of, do I punt? Do I kick a field goal? Do I go for it on fourth down? And we've seen the game sort of fundamentally change since the mathematicians have taken over the world. Clearly in your business, we've seen that for decades now. But in football, it's really been in the last 10 years that essentially things that every coach in the world took for granted, that this was the truth, this is how you had to do it, are no longer true. It's just not. Like the mathematicians told us all that we've been playing football the wrong way for the last 80 years, and now almost everybody's adopting the new mathematical way of making decisions.
Yeah, it's got to be a big change for coaches, I would think, who have to rethink their game plans a bit based on whether, on a 3rd and 10, they get 8 yards and what they're going to have to do next.
Well, I think almost probably like it does in the business world as well. It takes some pressure off of decision makers. I mean, most of the really hard decisions are those 51% to 49% kind of decisions. And so when you get there, the thing that you have to remember is you're going to be wrong 49% of the time, no matter what you do, right? So this is sort of that 50-50 call. And when you go into a press conference at the end of the game and you go, why'd you do that, coach? You lost the game. You go, well, the math said this gave me a 2% edge over doing it the other way. You want to do the math? You go do the math yourself. That's what our guys told us. And so it really, I think like a CEO or anything else, any other CEO, you just want all the edge you can get. And sometimes the margins are really small.
Well, have a great call. We'll be watching. Rest the chops because you're going to need them in that fourth quarter. And we'll talk to you soon.
Scott, I think you can be our third in the booth anytime you want, man. Come on over.
I'll do the Collinsworth slide anytime in the booth next to you guys. You guys have a great end of the year.
Thank you, Scott.
All right, take care. That's Chris Collinsworth joining us. A reminder, don't miss an NFL holiday doubleheader. It's tomorrow. Bengals take on the Steelers at 3 Eastern on NBC and Peacock. That's followed by the Bills and Chargers at 7:30 Eastern exclusively on Peacock, as we said. Straight ahead, 5-star stock advice with markets near recent highs. Capital Wealth Planning's Kevin Simpson joins us with his latest portfolio moves, including the one name he's buying. Already up 100% this year. I'll tell you what it is when we come back with Closing Bell.
All right, so we're coming into the last 27 minutes of the trading day. We'll have Monday off for the holiday. Got a lot of theta over the weekend, Monday. So selling premiums, not a bad idea. Meta back to VWAP. Meta back to VWAP. Came back and retested it. Let's see what's going on here. Meta had a nice little dip and a rip there. Okay, VIX at the lows of the evening session. VIX trading at 1327. All right, SPY just jockeying around right below VWAP. S&P 500. 47.75. Resistance overhead, 47.50. Support below. VWAP is just overhead. All right, looking for a higher low.
Recycling those proceeds back into the tech sector. We have a little Cisco. We like IBM, old school tech, 4% dividend. It seems like they're finally getting into the AI game. They figured out a way to utilize Red Hat from a profitability standpoint. I still think it's old school tech. What they do with Watson X will remain to be seen, but just lots and lots of cash flow. And Scott, it traded in the range for like 3 or 4 years. It's just started to break out. If there is a continuation of this broadening that we've seen here in the past month or two into 2024, which we fully expect, we're thinking that these other stocks will benefit from it. So that's the trade on IBM.
Yeah. I mean, you're essentially making the point as well when you say that you got Apple called away. Apple hasn't given you the opportunity to get back in because it's been steadily moving towards $200 a share, right?
Yeah, but I don't know that it's worth it. The multiple on Apple is a little bit stretched, a little bit on the higher side. For the past 11 years, every time that the Apple multiple's gotten up into the 30s, we seem to get it called away. The previous 8 times, we were able to get back into it lower on 6 of those occasions. 2 times we just had to pay more to get into it, and I probably didn't brag about it as much on those 2. But this year, we were able to take a position in Broadcom.
All right, looking for a higher low to print.
It's outperformed Apple by leaps and bounds. So we're really thrilled with that trade. And I know you teased it in the commercial, but we actually bought more this week. And the thesis is that this stock has still got plenty of room to run. With a 23 forward multiple, this is still a cheap stock. Now,
to get into it. So we now have a 3.5% position in it, but it's making us really look smart heading into year end. About a month ago, I couldn't wait for the year to be over because, we're value managers, we're dividend managers, and not participating in the Magnificent Seven made it a little bit of a frustrating year for 2023. But ever since the Fed threw in the towel, we've seen our stocks now catch a breather and go up. And boy, I wish we had another couple of months in 2023 instead of just a few days.
Well, why don't you think it will continue into 2024?
Yeah, I think it will. But we're operating as portfolio managers on a Bavarian calendar.
Okay, we've got a little over 20 minutes to go. Little over 20 minutes to go.
Give our shareholders something to smile about.
Yeah, are you more, I don't know, I want to make a leap and suggest that you sound to me to be more bullish than you've been in many, many, many months.
Yeah, 100%. Once the Fed pivoted, it's a game changer because it's really tough for me in my space to make money when rates are going up. And what we needed, the first thing we needed was for them to stop raising rates. And we got that. And the stock market has responded, as we all see. But I think that is just a tremendous catalyst to be really constructive for stocks, not just for the next few months, but really for the next couple of years. Because you may get bumps along the way, of course you'll get bumps along the way, but when you have a Fed that's going to be cutting rates maybe 24, 25, and into 26, that's really, really good for the stock market at its most basic level. I still think you need to be very careful about what's
All right, a little bit more selling.
Low tick alert minus 800.
I sound more enthusiastic. It's for good reason.
Yeah, it was unmistakable. But yet you're still trimming some of your positions like Visa, which is interesting. Tell me why you do that.
Now, Visa's been one of our winners, Scott. So we had enjoyed an over 25% return on the stock this year. But everything that I'm looking at is risk-adjusted portfolio management. So if we have a stock that gets to a 6, 7, 8% weighting, we feel like that's too much of anything, even too much of a good thing. So we'll use old school rebalancing. We'll trim it back to a 5% weighting. That's what we did here with Visa. They still have a tremendous moat. They probably process twice as many transactions a year than MasterCard. And their PE on Visa, forward PE is 31, MasterCard's 36. So we still think that this is the best of breed in the space. The dividend is just a little bit under 1%, but they've been increasing it by a 27% clip on average for the past 5 years. So really strong growth, no real exposure to defaults or things like that. It's a transaction business, a little bit of a fintech. We love the stock, but we want to make sure that we manage it accordingly because we want to manage risk. That's the ultimate.
All right, so I'm not doing much of anything except just scanning through positions. Probably not going to change much at this point in the day. We did reduce our exposure on Mara, and credit spreads are far away from our puts sold, so we're good there on Meta, Tesla, Nvidia. I was hoping for more price action in Apple, no follow through there. All right, the FANG stocks are mostly flat to lower. All right, SPY, either we get a higher low here or we continue to fade. Hard to say. We're right at support, 47.50. Last time we came through here at around 2 o'clock, we went right through it and then bounced. All right, biotech's hanging in there today. Moderna showing strength. Looking for a follow through next week. Moderna. Okay, S&P. Flip a coin. We're right at support, but it could go either way. Seventeen minutes to go. 17 minutes to go.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network. It's time to move forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Continuing some thematic discussions as we close out the year. Let's talk about ESG investing. Of course, the rise of rates has gathered a lot of assets over the past decade. But I will say it seems like the conversation peaked a year ago. Joining us, Ethan Powell, founder and president of Impact Shares, one of 3 ESG-centered ETFs, joins us. Ethan, welcome to the show. Thanks for being here.
Hey, thanks for having me. Happy holidays.
Likewise, good to see you again. Thanks for that. I was looking at the Google News interest search, where you can type in something and see like how active it is on searches. And the term ESG,
We're 15 for the close on this Friday. Let's get back now to the Stevens for a look at the key stocks she's watching.
And it's got engine maker Cummins in the red after reaching a $1.7 billion settlement over emissions and violations. It's the largest penalty ever for a violation of the U.S. Clean Air Act. The company was accused of altering hundreds of thousands of engines to bypass emission tests. And Occidental Petroleum rising after Warren Buffett's Berkshire Hathaway bought another 5.2 million shares in the energy firm. Berkshire remains the biggest shareholder with a nearly 28% stake in the oil and gas company, worth roughly $15 billion. Earlier this month, Occidental announced they would acquire shale producer Crown Rock in a $12 billion deal. Scott, back to you.
Appreciate it very much. Mr. Stevens, coming up, the multi-billion-dollar deal that has shares of this biopharma stock surging today. We have the details ahead, what it could mean for the rest of the healthcare trade next. We'll be right back.
Literally peaked on like Jan 2023. So what, do we just get distracted with Fed stuff this year or what?
All right, not much to do. We got about 13 minutes to go for the closing bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday the 22nd. We'll be off on Monday for Christmas. Be back on Tuesday. Hope everyone has a great weekend if you're cutting out early. Most people have already, most likely. The FANG stocks are pretty much sideways to flat on the day. NVIDIA's off $2.60. And Apple's off about $1.
It's time to move forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with
Okay, this higher low so far doesn't look like it's holding. We've got about 12 minutes to go for the closing bell. Okay, the FANG stock's starting to fade a bit more. Shaky, shaky, shaky. All right, we just got looks like a buy program here with 9 minutes to go. Everything is starting to snap upward. Nice little bounce. VIX dropping off to the lows with 7 minutes to go. Ho, ho, ho. All right, nice little bounce in the day. All right, so still up on the day, 0.1%, almost 0.2%, with 5 minutes to go. All right, a little bit of selling now. We got 3 minutes to go. 3 minutes to go. Hope everyone has a good holiday. We'll see you back here on Tuesday. Haven't decided when I'll send out the video for the week, whether I'll do it on Saturday or whatever. Free up the rest of my weekend. Maybe I'll do it tomorrow morning. Okay, so we got less than 3 minutes to go. Two minutes to go. 2 minute warning. Okay, everything's ticking up a little bit. All right. Coming into the close. Have a great one, folks. I'm looking forward to some time off. An extra day makes a big difference for me. Relax the brain. All right, got a hard stop right at the bell. Take care, everyone. We'll see you on Tuesday. Merry Christmas. That's a wrap. We're rallying into the close. Take care. Whoa. Nice little run up. Take care, everyone. Have a good one. We'll see you on Tuesday. Ciao.